live session with Stocks Never Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Hey guys, good morning, welcome to the live session of Stocks That We're Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hello everyone, good morning. Thanks for joining. Happy Friday. Juma Mubarak to everybody. Guys, thank you for joining today. Today is going to be a webinar that we're going to do, and it is entitled What It Is to Be a Sniper in Trading. So before we get into that, I just want to welcome everybody and hope you guys had a great week in the markets. I hope you guys had a great week with SST learning and taking your trading to the next level. We kind of gave a lot of stuff this week. There was a lot of this was yesterday's live session that we did. It was a lot to do on zone to zones. What are zones? And we specifically talked about demand zones, the green boxes. We talked about supply zones, the red boxes, and we talked about consolidation zones, the neutral zones, the neutral boxes. So if you need this weekend a little bit more help with identifying zones, and we talked quite a bit yesterday. This was like a 3-hour call, and we can see right now US 30 is breaking out of the all-time high supply zone. Remember right here, and this is a new all-time high breakout. We are at 42,802, so 2 pips above 800. So that's what a move. Okay, a lot of this has to do with today's bank earnings. So just before we get started into the webinar, I just want to make clear that we understand that there was banks that reported this morning. Pre-market, JP Morgan was a big one. They exceeded their earnings per share. They exceeded their estimates of revenue. Look at this, 41.27 billion was their estimated revenue, and they almost hit 70 billion. That's quite a big impressive beat over here. Growth looks good. Surprise is good, looking good. BlackRock reported they exceeded earnings per share. They exceeded revenue growth. It looks good. Wells Fargo exceeded earnings per share. Look at the revenue beats on these big banks, guys. What are they doing? Bank of Mellon also, here, exceeded earnings per share. Look at this, more than 2x their revenue. Something is going on here with the big banks that we need to investigate. We need to do some research over here. What's going on? Even Bank 7 over here. Look at the revenue beats, guys. 24 million to 37, almost 2xing that. That's, if you're asking me, that's pretty impressive. Okay, so and then if you also ask me, why is US 30 running like this? That could have to do with it. Okay, so always pay attention to big news. When we're looking into next week, you can already see we've got, it's a busier day. So Monday again, we not a busy day before the open, 0 after close 1. We also have Canadian bank holidays on Monday. It is Thanksgiving here in Canada. Today is Good Friday. We have, and then it starts to pick up Tuesday, Wednesday, Thursday. You see 16 before open, 11 after close, 10 on Wednesday before open, 19 after close, 22 before open. And also, guys, over the weekend, pay attention to who is reporting. You may see some big names that you've heard of. Morgan Stanley, some more banks. Look at US Bancorp. So we got a lot of finance again next week. But there's also other big names. I just want to see the day here. Here it is, Netflix. Netflix is reporting Thursday after the close. So Netflix could be going to all-time highs. Okay, American Express, another big name, Procter and Gamble, another big name. So make sure you know these things. This is part of your job. It's not like to be a sniper in trading is to be aware of your news, to be aware of who's reporting. It's preparing yourself. It's being a sniper in trading is all about preparation, so that when you're trading with precision. You know all the outcomes. Okay, so that's what we're going to talk about in today's webinar. Forex Factory, if you were trading this morning, okay, be careful around here, this 8:30 time. Canadian unemployment numbers came out. It's green from 6.7, from 6.6 to 6.5. Unemployment rate is going down here in Canada. We had US PPI. So remember, this week we had CPI, that's consumers, and we had PPI, that's producers today. There's a difference between core. You guys should start to get a good understanding of what this means. We talk about this every single day. And what else can I show you guys? Some news, okay? All the news in here. Tesla is taking a big hit today. Tesla is down almost 7% right now. What is causing this? They are in the news. Tesla stock drops as robo-taxi event leaves investors wanting more. So there was news about the robo-taxi, if you guys are familiar with what that is, but they're taking a little bit of a hit in their stock price this morning. And all of your news right here, if you want to know, here's another good article. Banks drive S&P 500 gains as JP Morgan rallies 5%. So if you want to read a little bit what I was just talking about, those big banks, here's a good little article to read. So read as much as you guys can, so that you guys can continue to learn and learn and learn and become the best traders that you guys can be. Okay, so if everyone on YouTube, fantastic, thank you guys. We already have 100 viewers. I love that. Can you guys hit the like button? We're going to get ready for our webinar. What it is over here, it's going to be on what is a sniper in trading, and we can get into this. Okay, so thank you guys, I appreciate it. How's everyone doing? Everyone on Zoom, how are you guys doing today? How is, again, weekly roundup, how is your entire week going? Just how is your week going in general? It doesn't have to be about trading. Just how are you doing? Any plans for the weekend? In Canada, as I said, if you are in Canada, any snipers, I wish you guys a happy Thanksgiving. If you guys do celebrate this weekend, enjoy the long weekend. Juanito, good morning, welcome. Captain J Boom, good afternoon. Thank you for joining, brother. I appreciate you. Val, welcome. Mats, thank you for joining. Mike, thank you. Chris, thank you for joining. A1 Everything, my man, thank you. Always here. I love it. Thank you. Sherry, welcome. Nice to see and hear from you. Dale, good morning. And everyone on YouTube, thank you guys as well. Tony Gold, Juma Mubarak. I hope everything you're learning with us, and I see it's paying in dividends. I saw you had a withdrawal, and it's amazing. So let's continue this. Tony, let's learn a little bit more about what it's to be a sniper in the markets. Gizmo, thank you for joining. I appreciate you. Frank, welcome. Juanito, Crypt, Yellow Vest, thank you. Chaos Dog, thank you. Stacy, welcome, guys. Thank you, Derek. I appreciate that. The intro is awesome. Thank you. I like that. No drip. Do I like the Robo Van, the Robo Taxi? I don't know too much about it. I don't know too much about it. So I gotta do I gotta do some more research on it before I can say anything about it. Okay. So welcome, guys. Thanks everyone for joining. Okay, so obviously when we get into the webinar, I just want to make it before we start the recording. We're not going to be trading. Okay, it's going to be a PowerPoint presentation. We're going to do a lot of talking about what it is to be a sniper in trading. If you guys are saying to me like, Ron, check gold, I don't really care. Okay, if gold is moving or if US 30 is moving, I'm not trading. Okay, so this is a webinar. This is where we put our thinking caps on. We get our brain working, and let's just sacrifice trading the 1 minutes right now for a couple hours, and let's learn what it is to be a sniper in trading, because what I'm going to talk about might help you next week, next month, next year. Okay, so these webinars are really important. We did a couple already and they're all on YouTube. We did technical discipline in trading. We did tape to tape trading. Yesterday's session was a webinar in itself on zones. What I was just talking about, the demand zone, supply zone, and consolidation zone. Very simple. Look for those key structures. With if the volume is, if it closes above then a red zone, then you change the color of the zone. So get in the habit of doing this and look for your trades off of these zones on whatever time frame you trade, and then utilizing the skills that we teach you about being patient, disciplined, allowing the trade to come to you. Look for your technical confirmations, use proper risk management, all of those things, and this will incorporate everything what it is to be a sniper in trading. Okay. So let's get started. Okay, is everyone ready? We're going to get started. I'm going to hit the record because that's very, very, very important, that we always record these webinars so that they can be uploaded to our website. And this is the start of our SST Super System Theories of Trading. And I would like to just introduce, before we get into it, what it is as a sniper, because we call ourselves Stock Sniper Trading, SST, snipers. Some of you guys have sniper in your name, your handle. So we're going to talk a little bit about that and how it relates in the financial markets. Okay, guys. So let's have some fun. Let's see if we can learn something new for a Friday, and then we can go into our weekend. Make sure you guys have a drink. Make sure you guys have a snack, because we're going to go for minimum 2 hours. I don't think I've ever gone less than 2 hours on any live session we've done. Soon we're going to be doing a lot longer. Soon we're going to be going for 4, 5, 6 hours. We'll take a little intermission, we'll have a break, and we'll keep going. Okay, so there's a lot we're going to be doing lately. Okay, so let's get into this. I'm just going to hit the record, okay? And everyone can hear me. Audio is good, and you guys can also see my screen, okay? Okay, thank you, Sherry. I appreciate it. Winchester, welcome. Thank you. Good morning.
Recording in progress.
Okay, thanks for joining, everyone. Welcome. This is our weekly webinar on what is a sniper in trading. So I've prepared a PowerPoint presentation for you guys. Some of these concepts are going to be, you've heard of them, but we're going to relate it as to what it is precisely being a sniper in trading. Before we get into that, I kind of just want to introduce the team, and myself. So if you go to our website over here, under our team, there's me right here. I'm Ron, and my partner Dave, and we also have Shahab, who does London. So I just want to briefly tell you a little bit about myself, so you get to know me. Some of you guys already get to know me for a few years now, but some of you guys might be your first week at SST and have no idea who I am. So I just want to briefly say, welcome, guys. My name is Ronnie, and I've had a passion with the financial market since a very young age. I'm telling you, a very, very young age. My father used to tell me when I was 5 years old, 6 years old, 7, 8 years old, I was always staring at the TV, at the stock market, looking at the numbers going up and down, and the percentages, and seeing the red candles and the green candles. It started from a very young age. I don't know why. No one really got me into it. My dad has no finance background or anything like that. No one in my family does. I was just gravitated towards it. So it started at a very young age. I pursued my passion by graduating university with a degree in finance and economics at the University of Western Ontario, and working as a trader, junior floor trader. I was working at a big bank, and specializing in what I was learning and what I wanted to do for the rest of my life, until the financial crisis in 2008. And I was a junior trader because I just graduated from university and just started to get my foot in the banks and learning and everything. But I lost my job due to the financial crisis and everything. And this is where I began to pursue my personal trading life and taught myself the world of price action and scalping. So when I was working in the institutional world, I didn't really know too much about price action. It was more of the bigger picture to help invest for clients, and not really scalping the 1 minute candles. You're looking for long-term investments through mutual funds, and bigger investments. So what I want to say is, like, price action is a skill that is self-taught, is self-learned. Maybe for some of you guys are also self-learning price action. So it is a skill. It takes a lot of time to learn. Make sure you're taking your time with it, and you're just learning as much as you can on a daily basis. And things that are not clicking in, that's what you need to focus on a little bit more. So I've been throughout 20 years, I've dedicated myself to the world of trading, not just here at SST. Okay, this was started like 4 or 5 years ago. I'm saying myself personally back in the day. Like, I've dedicated my entire life to the world of trading, and not just trading, not just hitting a buy and sell button. It's all about, I've dedicated my life to the education of finance, and I'm continuing. You guys see, I'm 42 years old now, and I still haven't stopped, and I'm going to go for the next 20 years continuing to educate myself. I want to educate myself today why the big banks have 2x their revenue beats. Like, that's something I'm thinking about right now as I'm doing this webinar, is that we could be talking about that, but we got to also talk about the importance of what it is to be a sniper in trading, so we can do this for a long time. Constantly pursuing a deeper understanding of the markets and refining my skills in the intricate art of trading psychology. My journey began with a fascination for the way prices move in the financial markets and a burning desire to unravel the mysteries behind them. So I always tell you guys, there's a story behind every candlestick, whether it's a daily candlestick, a 4-hour, an hour, a 30-minute, 15-minute, even a 1 minute candle. There is an entire story behind that 1 minute, that 60-second candle. There's an opening price. There could be a high of that in that 60 seconds. There could be a low in that 60 seconds. And then finally we get the closing price. And that can tell us an entire story of what happened in that 60 seconds. So I find candlesticks fascinating. I don't know about you guys, but I find, and candlesticks is price action. So that's what we'll be doing on our next webinar next week. I'm going to introduce to you guys the history of price action, where it began in the 17th century, how it went into Japan in the 18th century while they were trading rice in the fields, then how it came into the 19th century, how it evolved into the financial markets that we see today, and where we're at right now. So there's so much to learn about price action. As I delved deeper into the world of trading, I realized the crucial role that psychology plays in making successful trading decisions. Through years of experience and continuous learning, I began to appreciate how emotions, biases, and mental discipline can heavily influence trading outcomes. I immersed myself in studying price action, honing my ability to interpret market movements and make informed trading decisions based on them. So when I tell you guys there's a story behind candlesticks, we can look in what has already happened in the past by looking to the left. That gives us information as to where structure has been built, what we talked about yesterday, supply, demand, and consolidation, how to identify zones. And what we can do is, once we identify these zones, we can know what's going on at present time, and then we can predict with high probability what could happen in the future by extending these zones into the future. So everything that we show you guys, like on TradingView and the technicals, you can see how everything really plays out over time. And my passion for learning about finance through trading and investing only grew stronger over the years. I actively sought out education resources, I attended workshops, and engaged in other traders to expand my knowledge and stay ahead of the market trends. Each trade became a learning opportunity. As for you guys, I hope each buy and sell that you guys take, whether you make money, whether you lose money, or it's a break even, I hope that it's a learning opportunity for you. You'll learn from your winning trades, you'll learn from your losing trades, and you'll also learn from your break evens. And every setback served as a valuable lesson that helped me grow as a trader. So we talked about this the other day. How if you make a mistake in the markets and you lose money, look at it as psychologically as a paid lesson, and learn from that. You paid, you lost money, you lost, for example, $100 on a trade. That's a valuable lesson. And don't just leave your money and get mad. Figure out what happened and look at it as if you just paid for that lesson. I guarantee you will grow. You'll grow faster as a trader when you realize that these are paid lessons, as opposed to just throwing your money away and not learning from it. Okay. As I reflect on the past 2 decades, I'm grateful for my highs and my lows. Okay, I was at the lowest point as a trader when I was beginning. I had no idea about psychology. I had no idea about mindset. I didn't really know too much about price action that I know today. I didn't know that there was manipulated moves in the markets and things like that. I didn't understand these things until with more experience, I started to learn and education. So I'm grateful for the highs and lows. I can say that proudly. I'm grateful for my wins and I'm grateful for my losses because my losses really developed me to who I am today. So I'm grateful for the losses. I know it sounds crazy and I lost a lot of money, but I'm grateful and I've recovered that money and I've learned a lot from those losses, as they have all contributed to shaping me into the trader that I am today. Trading has not only been a means to supplement my income and taking care of my family, but it's been a lifelong journey of self-discovery, discipline, and continuous growth where I'm not going to stop. Okay, I'm continuing because this is a lifelong process. In order to be a trader or a sniper, you got to be a student to the game for a lifetime until you say I've had enough and I'm ready to quit or retire. I'm not ready for that yet. I want to continue educating is my passion now. I look forward to the years ahead with you guys, filled with new challenges, opportunities, and the endless pursuit of mastering the psychology of trading through the lens of price action and the love for finance. And guys, if you're in Zoom and you're in the lifetime group with us, what I'm going to start to do, I don't know if it's going to start this Sunday because it is Thanksgiving weekend, but maybe next Sunday, we're going to start our first ever call, and it's going to be ongoing for the years to come. It's going to be our lifetime support coaching group. So it's I'll be there for you guys if you're there for me, and I'm here to support you guys. I'm here to answer all of your questions. It's kind of like a support group. We can do whatever you want, but it's kind of like coaching as a group for you guys. And we can, and I also have like a webinar series for you guys as well, to take things to the more advanced level, because I know that you guys have invested in us, and I know that you guys are here for the long haul, so we need to invest in you guys as well. So that's my appreciation to you guys. I will get that started probably next Sunday, because this Sunday is the Thanksgiving holiday. Okay. My hobbies include, I love working out and training. I did some competitions where I did physique. I learned all about dieting. I went on stage. I owned a gym, also 14,000 square foot gym. It was a big gym. It was nice. I love playing sports. Basketball is my favorite, guys. I love fishing, and I love traveling the world with my family. This quote, I told you, we've used this. I've had this all my life, this quote. I also have it on some clothing I wear. The dream is free. The hustle is sold separately. That's up to you guys, okay? I'm not here to sell you guys a dream. I'm not telling you guys that everyone's going to be successful here. Some of you guys will, and some of you guys won't. But the ones that will stand out aside from each other are the ones that you guys that hustle, the ones that grind, the ones that are doing homework on the weekends, when you don't want to, when all your friends are calling you, hey, let's go out, and you're saying, no, I'm studying right now, I'm in the books, I'm watching a webinar. Those things, those will separate you from others, and then that's where you can be successful in life and in trading. So, and my specialties include, I specialize in trading equities, stock and options. We haven't really got into that education yet because I'm saving that until you guys are really ready. Because it's a lot more difficult than just trading Forex and the futures market. Trading stock and options is, you have to know a lot more than just Forex and things like that. There's a lot that goes into this. I know it looks simple. You just look at it like Netflix or Tesla, and if it's up or down, you just buy it. There's more to it in that. There's different ways how you can go about this market. You can own actual equity, you can own the shares, or you can go through options. So we're going to get into this. When I feel that everybody is psychologically ready to pivot into stock and options, when I feel that you guys are not gambling anymore and you guys are taking trading serious, and you guys are understanding the importance of risk management, you guys are understanding the importance of controlling your emotions in the markets, then we're going to start to introduce all of these things. I don't want to just introduce stock and options and you guys have no idea, and you guys are still gambling and you guys are still blowing up accounts, because you're going to do the same thing over here. So we need to learn to be responsible and mature traders. Okay. I do love Forex and futures. You see that I always am personally trading US 30, Dow Jones, and gold. Those are my two favorite securities. Also, if I had to throw one currency pair in there, it would be GBP USD or Euro USD. I do enjoy personally scalping the lower time frames, the 1, 3, 5 minute candles. I do swing trade. I can just pivot my mindset and go into 4-hour and daily time frames. Then it's just a simple transition. I do everything starting with a top-down analysis. Yes, this top-down analysis has existed before my time. I'm not gonna sit here and lie to you guys and say I invented top-down analysis. That would be silly. But I was following candlesticks, and I started to follow the higher time frame ones. Then I'm like, can I just go down? I started to see on platforms they had a monthly, a weekly, a daily, a 4-hour, and I just started clicking on them back in the day and started to learn more about the candlesticks. Then I just kept going down to the 1 hour, to the 30 minute, to the 15 minute, to the 5 minute, to the 1 minute. Started learning more about these things, and then I started to see that I wasn't getting the best information from the 1 minutes because it's the lowest time frame. I started to see that more structure was holding at the higher time frames. So then that's when I started to because that's when I was making a lot of mistakes. I was just jumping in the market and just going straight to the 1 minute, 5 minute candles and start trading without knowing any structure above me or any context on the higher time frame. Then I started to say, why don't I just do the same thing that I'm doing on the 1 minutes, but now I do it on the daily, and then I do it on the 4-hour, I do it on the hourly, I do it on the 30 minute, I do it on the 15 minute, and I do it on the 5, and then I get some levels. Then it started to make a little bit more sense to me. I started to see that I was cleaning up a lot of my mistakes. I was cleaning up a lot of my impulse trading. I was seeing that maybe I should wait for price action on a lower time frame to come to the higher time frame to make a decision. So I started to learn the importance of top-down analysis, and I stick to that every day. That's why I tell you when we get into the calls, let's do our top-down analysis before we even go to the lower time frames or we even look to entertain a trade. I am a zone-to-zone trader. That was all, again, self-taught. By doing the top-down analysis, I started to identify my zones in the market. So then I said, why don't I just trade from one zone to the next zone and be very, very disciplined with it? And I started to see that I was achieving a little bit more success in my trading, and the first time in my life seeing this. And I'm like, this is unbelievable. I started to see I had profit for an entire week. I've never seen that in my life. And I started to, can I do this again week number 2? yeah, there was some issues with how much leverage and all of those things. You know, those learning curves that we go through as traders, then you're going to find what your comfort zone is. And I'm big proponent on psychology and mindset, okay? Even if you know all of these things, if you know your top-down analysis, you know you're very comfortable scalping, you're very comfortable swing trading, you're very comfortable in the markets, you understand your zones, it doesn't matter. If you don't understand anything about psychology and mindset, then you're still going to be a struggling trader. So please, guys, pay attention to psychology and mindset in your own trading, your journaling, and all of the emotions involved with trading. Okay, so that's a little bit about me. That has nothing to do with today's webinar, but I want to kind of introduce myself, as I will be educating with you in every single week. So I want you guys to know just a little bit about me if you don't. Okay. So let's get started here. Okay, so what we're going to talk about today is what is a sniper in trading. We are stock sniper trading, and you hear this term often, snipers, not all over. You hear snipers in trading, taking a sniper entry, all of these things. So we're just briefly going to talk about what it is to be a sniper in trading, and we're going to get into this. Okay, so what is a sniper in trading? In trading, the term sniper is often used metaphorically to describe a trader who is highly skilled at precisely identifying and executing trades at optimal entry and exit points. Okay, so make sure you guys read that. Like, not just me reading it to you, but you guys reread that. Okay, let me just repeat it. So, because this is basically a perfect definition of what a sniper is in trading. Okay, and it's metaphorically used. If you don't understand what the word metaphorically, it's like we have a sniper in military. You guys understand what a sniper is in military, and we call ourselves snipers in trading, but we're not really militarily trained snipers. Okay, so maybe some of you guys are and have served, but I personally am not a sniper in the military. I'm a sniper in the financial markets. So it's describing a trader who is highly skilled. Okay, so some of you guys are highly skilled at trading now. You're highly skilled at precisely identifying and executing your trades at optimal entry and exit points. So this is where a lot of times the zone to zone trading will benefit you. It's understanding the candlestick formations. It could be optimal entry, meaning we talked about this week, is taking a trade with zero drawdown. Okay, there's some of you guys that are taking trades now and you're taking them with zero drawdown. They're going directly right into profit. That is because of your analysis. That's not just by luck. Maybe for some of you it's luck once here and there. But if you're doing this every day, I don't think it's luck anymore. I think some type of skill is working here. So that's what it is to be a sniper in trading, is taking optimal entries with minimal to zero drawdown, and your exit points are precise. Like when you're getting out at an area of supply and then all of a sudden you see it reverse from there, and so it's maximizing your profits. Okay, this concept borrows from the military definition of a sniper who carefully selects targets and takes precise shots from a distance. So it's the same thing, same analogy as a sniper in the military, where they are taking precision shots from a distance and they see their target, but they have to also overcome emotions, breathing techniques, all of these things, mind control, which we have to do in the markets when we're trading as well. Okay. So what I'm also going to talk about are key characteristics of a sniper trader. Okay, so, and let me know, okay, this is a webinar, guys. This is the way how from day one, from 5 years ago when we did our first webinar with you guys on Zoom, I always said when I'm doing a webinar or like when I'm learning, if there's a point I'm talking about, like right now I'm going to start talking about precision. If you guys understand this point and you guys are getting this, put a check mark. If if there's a concept or something I'm talking about and you need to work on this or you don't understand it, put an X beside it. This is how I used to learn while I was in school. How I learn every day. If I'm reading something and there's something that I understand, I read a paragraph and I understand it, I put a check mark beside it. Then I know that I understand it. I don't really have to invest more time in reviewing it. But there might be something I'm reading and I'm not sure about it. So then I put an X. And then that's something that I see it for later on, and then I got to go and review it. And then until I can put a check mark beside it, then I understand. If I have check marks on everything, I'm good to go. If I see some X's on what I'm learning, then I know that that's where I got to invest and spend more of my time to learn those concepts. So right now, think about yourself right now with precision. After I read this, then I'm going to ask you a question. Okay, so key characteristics of a sniper trader is number one is precision. Just like a sniper takes careful aim before shooting, a sniper trader focuses on making trades with precision. They pay close attention to technical analysis, chart patterns, and market conditions to find the best possible entry and exits. Now, if you guys are at the point where you feel like you're taking your trades with precision, you're paying attention to your technical analysis, you're paying attention to specific chart patterns, you're paying attention to market conditions, and you're making the best possible entry and exit points. If this is something you're achieving and you're working well at it, put a check mark beside this. If this is something that you're struggling with, put an X beside this, and then this is something that we need to work on, and I will have a follow-up webinar on just specific on precision in trading. Guys, are you having any issues with the audio? I see iPhone is having some issues here. Can you guys hear me okay? Yeah, okay. Sorry guys. If there's any issues with audio, you guys let me know. Okay. Number two, patience. Okay. This is a big one. Sniper traders are patient and disciplined. They wait for the right opportunities instead of forcing trades. This means they may only take a few trades over a specific period, unlike more aggressive traders who might trade frequently. Okay, so let's think about this. How many times do we say patience and discipline in the market? I probably say it 100 times on every single live call with you guys. But I'm not just saying it to say it, okay? Are you guys really working on your patience now? Put a check mark beside patience. If you guys have really changed your trading and now you're starting to see the benefits of being a patient trader as opposed to being an impatient trader. It's night and day your results that you will see. But some people just say, "Yeah, I'm patient." Are you really patient? Like, this is what you have to learn if you want to be successful in trading. You have to understand this. Not just understand the definition, not just understand what it is. You have to really display this in your trading. There's times where you'll miss out on a trade and you want to chase it because you see these big green candles and they've left without you. There's times where you have to keep telling yourself, I cannot get in and keep buying that green candle at the high because there is a probability that it may reverse and you're stuck in drawdown, where you did not have to take that impulse FOMO trade in the first place because you've learned over time patience and accepting that if a trade is moving without you, it's gone. It took me years to understand that concept. I don't know how else to explain this. I think it's only within that people can explain this. And I don't know from everybody here. I don't know internally in your brain what you guys are thinking. But if you guys have really understood patience and discipline now, because some of you guys, I'm being honest, when I met you guys from day one, you guys were reckless traders. Reckless. Some of you guys in the group, and you know who you are because I've had one-on-ones with you and I've had coaching sessions, and we've tried everything to figure out why you are a reckless trader. And now I can confidently say that a couple of these reckless traders in our group who were constantly blowing up accounts and losing money, they are, and I can say this proudly, I don't want to mention the name because I haven't had the conversation if they want me to mention their name, but they are some of the most successful traders we have at SST. And I'm very proud to say that. Okay. Sorry, guys. Chris, I'm just reading what you're writing. I'm breaking up. Guys, are you guys having a issue with the audio? Let me know because I'm losing my train of thought. It's all good? Okay, guys. Okay, so where was I? I was talking about patience. Okay, so make sure you guys understand not just the definition. We all understand. We all know what the definition of being patient is, but you got to, this is surface level like definition. You got to go deeper and dig in. What does this guy mean when he's saying patience? Sometimes if a trade goes, let it go. Okay, don't worry about it. Always understand. I'm telling you because I've been in the markets for a little bit, and I can attest and assure you there will always be another setup. This also took me years to learn. I'm saving you guys years of financial loss. I'm saving you guys years of learning this. I'm telling you I'm giving you guys kind of the recipe for success in trading is if you miss it, who cares? There will be another trade coming in the next 15 minutes, in the next hour, the next 4 hours, tomorrow or next week. There will always stop chasing trades that you're not a sniper anymore. If you're chasing a trade, it's you're not taking a calculated trade. You're going against all principles of being a sniper. Okay, so that's first thing. These are very important. Precision, patience. Continuing. Look for high probable setups. Some of you guys have no idea what a high probable setup is. Some of you guys have no idea what a setup is. Some of you guys are just coming on live calls and say, Ron, are you buying or are you selling? Ron, when are you buying or are you selling? Are you in a buy or are you in a sell? And those are the traders who are going to be so unsuccessful and lose all their money in the markets. I'm being brutally honest because they haven't even looked at a chart. They haven't even done any analysis. They have no idea what security we're even trading. They have no idea what even time frame we're on. All they want to know is when to buy, when to sell without any background information. That is a recipe for disaster. If you are one of those traders, I highly recommend that you stop doing that and you start to learn. Okay, stop jumping from YouTube channels to YouTube channels and begging people for whether they're buying or selling. In my opinion, and I know it's going to piss off a lot of guys on this call, and probably some people are going to unsubscribe and unfollow us. I don't really care. If you do this approach, you are lazy. Okay, I'm being brutally honest with you guys. You guys are very lazy. You're not going to put in the work, but you want to be kind of successful in trading, where others have invested their entire life into this to learn this, and you haven't done anything, but you want everything that people have done. It's wrong in all aspects, guys. So try to learn the skill of trading as opposed to just asking people where you're buying, where you're selling, and things like that. You can do whatever you want. I'm not here to tell you guys anything. That's on you. But what I've seen over the years is it's a recipe for disaster. Okay? And then you're lost. You have no strategy. You have no idea what's going on. You're asking one trader who has a different style of trading, then you ask another trader who's doing a different style, and then you just have no idea. You're just buying blind and hoping for the best. That's not trading. That's gambling. Okay? So if you want to gamble, the markets are open for gambling. If you want to treat the markets as a business, then you have to look for high probable setups. So snipers look for high probable trade setups based on their analysis. So you have to conduct some sort of analysis to find a high probable setup. Your analysis is your business. Okay, I'm telling you that I am a top-down analysis, I am a zone-to-zone analysis, and I scalp the markets. Okay, that's my analysis. And then I throw in some fundamental analysis. I throw in seeing what security to trade, and then base my. Some of you guys are trading smart money concepts analysis. That's fine, but that's your analysis. So you can also find high probable setups with that. Some of you guys are ICT traders. I still don't even have a clue what the hell ICT trading is, but it's a strategy that I don't need to learn because what I do is successful. So I don't need to learn any new concepts. If I was struggling, then maybe, yeah, I would look to learn some new concepts, but I don't need to because what I'm doing is working right now. It's very simple. I don't need to complicate it by learning other things right now. I'm learning other things in the market, what affects volume, what affects liquidity in the market, not strategies. I'm good for strategies. But some of you guys are very well ICT traders. You guys do your analysis and you take high probable setups off of ICT. If that's what you do, fantastic. But make sure you're looking for high probable setups, whatever type of trader you are. If you trade with indicators, okay, some of you guys use Fibonacci. Okay, don't just trade, but look for high probable setups on the Fibonacci retracements. Look for that golden zone. Look for those pullbacks in there. Look for those. You'll become more successful by looking for high probable setups. If you're a price action trader and you're looking for chart patterns, some of you guys are familiar with a double bottom. There's two bottoms, but some of you guys don't understand that the second bottom is more powerful than the first bottom. So a lot of traders look for high probable setups on the second bottom to take a trade. Other traders also look for the break and retest for confirmations for those high probable setups. So there is a lot that you can look for depending on what style trader you are, but make sure you're looking for setups that have a high probability of success. Don't just take an impulse candle. Impulse candles are not a high probability of success. It's not a high probability setup. Impulse candles 90% of the time fake you out and cause you to go into drawdown, okay? Because you've taken the trade before the volume has even closed. So we don't know what will happen in that entire time frame until it closes. And that might be for 60 seconds. If you're taking an impulse on a 1 minute candle, remember there's 60 seconds to go. We don't know where that will close until the 60. If you're doing it on a 1 hour, if a 1 hour candle opens right now and I take an impulse trade and it's the first 6 minutes of the 1 hour, there's still 54 minutes to go until that candle closes. Then I can maybe look for a high probable setup. Okay, so make sure, guys, this weekend when you're reviewing your journal and you're looking at your trades, whether they were the winners and the losers, look at the setups. Were these high, if you have winning trades, are these high probable setups that you could take over and over and over and look and identify these? Then maybe that's something that you should be concentrating on. Are these, if you're taking a lot of losses, are they exactly what I just said? Are they like, they're not even good setups? You're just taking trades out of anywhere and there's no context behind them? Then maybe we got to start to get a little bit more disciplined, not taking those, get a little bit more patient, waiting for high probable setups. So everything ties together. So when I'm talking about precision, patience, high probable setups, everything is starting to put a check mark here, check mark there, and then you're going to probably start to achieve some success. But you will not achieve success just because you're finding high probable setups, just because you're patient, and just because you're precise in your trading. That doesn't mean anything. If you don't understand this concept, risk management, okay? Without risk management in the markets, you are going to get liquidated, okay? The banks, institutions, corporations, Wall Street, market makers, they have more capital than you and I. Even if all of us put all of our capital together, we still don't have enough, okay? So we are retail traders, Unless you're a professional trader and you're trading on Wall Street, you're in a whole different category. But for the most of us, we're just retail traders here. So a successful sniper trader employs robust risk management techniques. This includes setting appropriate stop loss orders to minimize potential losses and adjusting position sizes based on market volatility and personal risk tolerance. Okay, so I get asked a million times when I'm live trading, Ron, how much are you risking? Ron, how much are you what lot size this that? Again, I always say it's nothing to do with you. Like my risk is different from your risk. Your risk is different from someone else's risk. You have to treat trading personal. Okay, you don't know what my if I'm risking 1%. Like you don't know if I'm risking 1% on $100. You don't know if I'm risking 1% on $10,000. You don't know if I'm risking 1% on $100,000. Okay, so but if you try and do that with your account, or if I just say I'm betting $500, what context does that give you? If I say I'm going to risk $500, what if I'm trading with $1 million account? What if I'm trading with 100,000? What if I'm trading with 10,000? And then you're trading with only $500? Like, what are you going to do? You're going to risk the entire $500 on that account? No. So you have to have some sort of risk management plan in trading. Okay, and this is where we can dissect this. Like, for example, real quick, if you're trading 1% for the entire day, do you put that 1% all on one trade and that's it? Or do you break that apart? That's what I do. So if I'm risking 1% of my entire account, so for example, if the account is 100,000, I'm risking $1,000 today. Okay, how many trades am I going to take? It all depends on this. It all depends based on market volatility and personal risk tolerance. Okay, market volatility. Maybe if I know today, right now is a Friday, I know that there was some news in the markets, I know that there was a lot of earnings, I know Fridays are probably choppy days, then maybe I'm going to reduce my risk just by that type of research. If I see that it's a Tuesday and the volume is trading fantastic and it's trending bullish, it's making higher highs and higher lows and higher highs and higher lows, there's not a lot of consolidation, there's not a lot of choppiness, it's just clean trading, that's a day that maybe I'm going to take advantage of, and maybe I'm going to risk a little more that day, maybe be towards the entire 1% that day, because the market is moving in a direction that I feel comfortable trading. If I don't feel comfortable trading, or I know it's a risky day, then just naturally lower your risk. It's not a cookie cutter approach where you got to trade with 1 or 2% every single day, no matter the day, no matter the security. And no, this is where you got to pick and choose how much you want to risk, how much, what security you're trading, how the market is moving. Is it a day that I need to trade more? Is it a day that I need to trade less? This is where you're going to develop as a mature trader. You're going to start to see the days that are better than others. You're going to start to see the days that I can risk a little more, and then the days that I got to be a little bit more safer and more conservative. This is how you need to approach your trading. Don't just do like a cookie cutter style, just 1% all day, every day. If I'm jumping from security to security, maybe I'm more comfortable and confident trading US 30. That one I can feel that I can risk a little more because I got more experience. If I'm trading a security, if you guys say, Ron, go to NZD, anything like a New Zealand pair. I haven't traded a New Zealand pair in years. So for me to just go over there and just start trading with 1%, I don't know. I gotta maybe start small, get a feel of how it's moving, then start to increase. But risk management is everything. I see some of you guys have no concept of risk management. It's like ridiculous. You guys are just gambling, okay? And you're going all in, you're blowing. I don't know how you blow a personal account, okay, for number one. If you blow a personal account, you've lost 100%. Like it's when I'm saying risk 1 to, even if you want to go to the higher end 2% per day, how are you losing 100% in blowing an account? It's mind-boggling for me. So I know that you guys have absolutely no understanding of management on risk in the markets, and maybe it's a joke for you. Maybe it's I don't know what it is, but that's not going to achieve long-term success. If you want long-term success in the markets, again, the word is long-term. So you got to give yourself as many outs as possible and retain as much capital. You're going to have a losing day. If you lose 1 or 2%, okay, but the next day maybe you can recover that. If you lose 50, 60%, that's a big recovery, okay? And mentally could destroy you, okay? Your entire psychology. So, thankfully, some of you guys are really getting better at risk management, and I respect that, and I say thank you to you guys taking it to the next level. Because Dave and I have worked with everybody here at SST, and if we could recover some guys with absolutely no risk management approach and blowing up everything to now they're very disciplined, I know that everyone can do it, including myself. Okay, I did it as well. Focus, number 5. Sniper traders often specialize in certain markets or instruments, allowing them to develop deep expertise. This focus helps them recognize patterns and behaviors that might be missed by less experienced traders. Okay, so make sure you guys are focused. I can't stress the importance of this. When I mean focus, you are focused in the market. Like right now, if I'm trading, I'm focused right now. I'm in my lab right here. I'm in my area. I don't have my kids. They're at the grandma's house right now. So I don't have kids screaming and yelling and distracting me. So I'm focused. When we're focused, we're at our best to learn. We're at our best to trade. Okay, so take it a little further and not just focus, laser focused. Okay, I'm sure when a sniper is on the field in the military, they are laser focused on their target. They're not sipping a coffee and talking to their friend or checking their emails or checking their phone when they're in battle. They are laser focused on their target because a miscalculation of a millimeter could be a disaster. Okay, so same thing, same analogy with us in trading. If we are not focused, if we're looking, are we looking at the charts? Are we paying attention to the price action? Are we flip-flopping charts? Are we texting our friends? That's not like, you gotta be laser focused when you're watching price action. That's why I zoom in and I watch how the opening price of the candle, do they gap it up, do they gap it down, is it an ignited open, what type of open is it, is there a pullback, is there a low right away, is it a quick flip? Then all of these things I'm processing in my head, how all of these things are happening. I'm processing this because I'm focused. I'm processing this because I'm paying attention to the real detail and price action. I'm not looking at my phone and texting my friends or like looking at the TV behind me. I'm focused. Do you guys understand the importance of focus when I tell you, like, snipers on the military have to be laser focused because a miscalculation could be detrimental to them, to their fellow soldiers that they're protecting, for their own life, everything. So the same concepts for a sniper in the markets. Yeah, we're probably not going to lose our life in the markets, but you could lose an account. But getting an account blown up is like you got shot, like you had no idea what you were doing. Okay, and then if you make a successful trade, then you're doing everything. You're focused, you're disciplined, you're patient, you're managing your risk, and you're doing very well. Okay, so focus. Make sure that, guys, you're learning some sort of focus. Everyone asks me, guys, this is off topic, Ron, why do you smoke so much weed? Okay, it's not just because I smoke weed to have a good time. I smoke weed for focus. Okay, for some people it's different, I don't know, but for me, when I smoke weed, I'm very focused. I pay attention to detail. I'm more patient, I'm more disciplined. I didn't start smoking like yesterday. I've been smoking for 20 years. So it's really helped me. But that's not what this webinar is about. That'll be for another time. Okay. 6, discipline. Again, we say these words over and over. Patience and discipline, patience and discipline. We can say it over and over, but you got to put it into work. It's not just saying it. It's not just saying these words. It's actually putting them to work. Snipers adhere to a trading plan strictly and do not stray from it based on emotional reactions or impulses. They follow their strategy and only enter trades when their criteria are met. So let me repeat that and read that again. Snipers adhere to a trading plan strictly. So I'm talking personal for myself, and then you guys reflect on yourselves. Do you guys have a trading plan? I have a trading plan every single day I go into the markets. It's so planned that if I stray away from it, I know something's wrong because it's so repetitive. It's the same shit I do over and over and over. It's just like driving a car. I'm sure all of us can drive a car, and when we're driving, we're listening to music. You should not be texting in the car while you're driving, but some of you guys do. But you could also carry a conversation with your passenger beside you, and you're going through a green light. You know when it's a red light, stop. You know when you got to switch a lane, you're signaling. You know to look over your shoulder. These are just repetitive moves that you've been trained to do over time while driving a car. I don't think when you're driving, you're thinking every single time I got to signal. It's just automatic. You're doing it while you're driving. Trading should be the same thing. You should have a plan every single day when you're trading, and it should be automatic. You shouldn't be second guessing yourself. So when I start, I go right into the news. Forex Factory, what's going on? Is there any specific folders that I should make note of on the day that I'm trading or the specific time I'm trading? Is there any earnings that could affect the volume that I'm trading? What security am I trading today? And how is it moving? I'm going to conduct a top-down analysis, starting from the higher time frames, moving down to the lower time frames. I'm going to start setting up my zones. I'm going to start looking at the price action and get clues whether there was fake outs, where they grab liquidity, how it's moving, is the market trending, is the market choppy? All of these things I'm processing to finally get me into taking a trade. But I don't just jump into the markets and just start trading. There's a routine that I do, and it's a disciplined approach. And I feel when I started to do this, my trading started to become more consistent. My profits started to become more profitable, first time ever, because now I'm following a plan. When I did not have any plan, I did not have any discipline, I had no idea what I was doing, I was flip-flopping, I was jumping from security to security, I was jumping from strategy to strategy, I was jumping from time frame to time frame, I was second guessing myself, I wasn't feeling confident with what I was doing, so that was leading to a lot of losses. So make sure you guys understand that when I say this, I mean this. You guys have to have some sort of trading plan. Everyone's trading plan will be different from each other, okay? That's my trading plan. That's what I do. That doesn't have to be yours. Yours might be completely different with your personal lifestyle and everything that you do, okay? And do not stray away from it based on emotional reactions or impulses. So I was talking about this the other day. There was a trade I took this week where it went up 12.5 pips in profit. I didn't take my stop loss to break even because I was looking for it to get to 17.5 pips. I got greedy for 5 more pips to hit that hourly white resistance line, and that trade tweezer topped, if you remember it, and came back and hit my stop loss. So what I'm saying by that is I reviewed that trade with you guys on the call, and when I looked back at it, the entry was exactly what I wanted. I waited patiently for that entry. The entry was precision. It was with zero drawdown. It did exactly what I wanted it to do. It retraced 50% and wicked out of that 50% 4 times. The next bar that opened was when I was at 12.5 pips, was an ignited bullish bar that filled the wick, but it just couldn't break that tweezer top high. And it was set up perfectly to break that. 99% of the times it would break that high and go to the hourly and move for 17.5 pips. But I took a loss. So is that now going to affect me that I'm not going to ever trade that strategy ever again? No, because I know that that's a one-off. There was something that I failed to do in that situation, was to just simply bring my stop loss to break even, and that's what I failed to do. So when I looked at that, that was my mistake. But the trade setup, there was nothing wrong with that. So that doesn't mean that I'm going to avoid that setup at all times. No, because that is a high probable setup. It didn't work out where to get the additional move. But when I look back at it, I failed to bring my stop loss to break even. That was the issue with that trade. Okay, but the trade itself, I'll take that all day, every day if I see that setup. That's not going to stray me, or I'm going to base that trade now on emotional reactions. No, because I look at it and that was a good trade. So I will look for that again tomorrow or the next day and continue to trade off of it. I need to adjust my risk management on that style of trading. So also, snipers who are disciplined, they follow their strategy and only enter trades when the criteria are met. So make sure you have a little bit of a checklist. Soon it's going to become so automatic, you're going to be doing it in your head. Like checklist. Have you done a top-down analysis? Yes. Check. Have you figured out some zones or some structure in the market? Yes. Is the market trending? Is it consolidating? Or is it uptrend? Is it bearish or trading sideways? You've established, let's say it's an uptrend. Are we trading at the highs, or are we trading at the pullback lows? Where are we trading? Where can we enter? Is there any patterns forming? Is there, like, for example, a double bottom and it's a pullback on the second bottom in the demand zone? Are you buying the second leg, or are you going to wait for the breakout of the neckline and wait for the pullback retest? So all of these things. Make sure criteria is met before you take a trade. If you see that your criteria is not met, don't take the trade. Then stop yourself from taking that trade, because make sure every time you take a trade in the markets, you have gone through all criteria and everything is checked off. Okay, if you're taking trades and criteria is not met, then it's not a high probable setup. It's a setup, it's a trade, but when we're talking about high probable setups, all criteria must be met. Okay, does that make sense? All criteria. Okay, so let's talk about quickly a few types of sniper entry techniques. Okay, so we talked about this yesterday. Someone said, what are different type of techniques for entering? So there's breakout trading. How many of you guys are aware of breakout trading? What is breakout trading? Snipers often watch key levels of support and resistance, waiting for a stock or security to break through a significant price point before entering a trade. The breakout can signal strong momentum. Okay, so there is breakout trading, like a green volume breaking out of a resistance level. That is breakout trading. So you can trade that if you feel confident taking that, but at the end of the day, that is still an impulse breakout, because we do not get any contextual information until that body of volume closes. Okay, once it closes, then it tells us more to the story. So maybe it was maybe I'm talking a 5-minute candle, and the first 2 minutes it impulsively broke out of that resistance. Then the next 90 seconds it retraced back down and got rejected. Then the final minute it came back up and it actually physically closed with green volume above that resistance point. Now that gives me context. Now I know that it's not just a breakout impulse move. Now I know that it broke through the resistance, but now it closed with the volume above. So psychologically, when we're talking, that plays a big role in the markets, in the depth of market, because now everything starts changing. All pending orders start changing. Offers might be pulled and more demand might be injected. There might be more buyers inclined now to start to put some buy limits and buy stops in the market to get filled, to maybe start to take the trade and maybe make a bullish move here. Okay, so breakout trading, there is rules and regulations, how to trade breakout trades, I would always recommend waiting for volume to close to give you more of a probable setup. If you're taking just an impulse, it's not high probable. You can have intuition, yes, but there's also, you should have rules when you're taking impulse trades. I have rules. When I take an impulse candle, it's basically I'm pipping and dipping out of that candle. Why? Because I'm trading it before it closes and it's breaking through a critical area and I have no idea where it's going to close. Okay, so this is where I've trained myself over time. If I take an impulse trade and it goes into profit 5, 10, 15, 20 pips, again, you have a drill to do. Automatically take your stop loss, go to break even. You've reduced your risk. You have no capital at risk. You can do a trailing stop loss if you have enough time. Maybe secure 5, 10 pips, and then if it pulls back, you've secured that. But you got to have some sort of rules, because if you just take an impulse breakout trade with absolutely no risk management, if it gets rejected, it has a high probability of getting rejected because it's testing that resistance. It can initially break through, but then when it goes up the higher depth of market, there could be a huge supply order that absorbs that and then pushes it right back down. And then it closes below that structure, and then the next bar is red, ignited, and pushed down with that momentum. And before you know it, you're in 10, 20, 30, 40 pips of drawdown, and you're panicking, and you're getting mad, you're getting angry, emotions are playing. And then when I look at the trade and we review it together, I'm like, you didn't even have to take that trade in the first place. Why are you so angry? Why are you getting mad? Why did you just revenge your next 3 trades? Why? That was in your control. You controlled that move. That was your decision. Take the impulse with absolutely no risk management, and now you're mad. But if you just waited patiently for that entire bar to close to give you a little bit more context, then maybe if you saw all that happening, you wouldn't have even taken that impulse trade. And then therefore, you're not even in drawdown. Therefore, you haven't even taken any losses. You're still focused. You're not upset. You're not revenge trading. You're not mad. So all of these things will destroy us as traders if we don't understand what we need to do in these markets. Okay, so with this being said, breakout trading, just wait for a body to close. That's it. It's that simple. Just wait for it to close. And if it closes above, flip the red box green and now continue to watch. Is it going to pull back red, red, red into the green box and get that is a better entry. At least now you have context behind it. Now you have it physically broke out of the resistance. It physically closed with the green volume above. The supply physically turned to a demand zone. There was a pullback that came right in there, and now you're buying a more confirmed high probable setup than just buying a breakout trade. Okay, so that might help achieve more success down the road. So just look at those 2 traders. The one trader that took the impulse and lost and is mad and revenge trading and pissed off, and then the other patient disciplined trader who just waited for the bar to close, got a nice pullback in the demand area, bought that, and maybe the trade went directly into profit with minimal to zero drawdown. Look at the 2 difference in traders. Okay, the one trader waited patiently for volume to close, got a pullback entry in a demand zone, and was profitable in the trade. And then the other trader who took an impulse and lost and is pissed off. Okay, so there's 2 different traders. And then who in the next trades is going to continue to be profitable? I think the one trader B, the one who waited, who's already up in profit, confident with the high probable setup, could probably wait for trade number 2 and have another successful trade. The trader A, who took the impulse and hit stop loss and is mad at the markets, is probably going to be more inclined to now trade on emotions, maybe revenge trade, maybe all that's in his mind is I got to make back what I just lost and I got to make it back fast. And then now the market is consolidating and you're trading all the chop and you've got yourself into a complete disaster that could have been entirely avoided with a little bit of discipline. Okay, that's breakout trading. You have to understand this. There's techniques how to trade this. If you're not experienced at breakout trading, avoid this at all costs. Okay. Pullback trading. This is what I recommend more for if you're a beginner trader or if you're an experienced trader. Pullback trading. Avoid breakout trading at all costs. Wait for pullback. That was that option 2, trader B, what I was talking about. How a breakout trade could turn into a confirmed trade with volume closing above, and then you wait for that pullback to come into your zone and then maybe buy the pullback. After the initial price movement, a sniper may wait for the price to pull back to a key support level before entering. This allows them to enter at a better price point with reduced risk. Okay, repeat that again. You're entering at a better price point with reduced risk. So you are entering maybe at a point of control where there is a lot of pending orders waiting to buy with you. Okay, so you're not the only one. That's those fair value gaps that you're identifying in the markets. Those are gaps that there's a high probability that you'll get a better trade set up in there than just taking a breakout. Okay, so pullback trading, we'll have specific webinars just on pullback trading. I'll have a specific webinar just on breakout trading, and we can talk 2 hours with charts about breakouts. We can talk 2 hours with charts with pullbacks. So I'm going to take this, every single concept that we're talking about here, I'm going to take it. Like I said, we have 100, 200, 300 webinars coming. It's going to be intense, guys. I hope you guys are ready. Reversal patterns. Okay, some of you guys are getting really good at trading reversal patterns. If you guys are struggling with this, avoid them and look for a different entry. Reversal patterns. Sniper traders look for chart patterns that indicate potential reversal, such as your common head and shoulders, your common double top or bottoms, and your common candlestick reversal patterns. They enter trades when these patterns confirm their analysis. So if you're looking for entries on reversals, like if you have a bullish move and you're looking for it to reverse bearish, you got to kind of maybe just look for some similar patterns, like a head and shoulder that has one peak representing the left shoulder, has another high peak representing the head, or maybe the liquidity grab above the highs, and then the market pulls back to the shoulder level. There's a third peak which is similar to the first peak, and that creates your head and shoulder. And then what that's telling me is that the supply, the offers are coming down, and then all we have to do is break the key support level, the neckline, and maybe then the sellers will start to redistribute all of that absorbed volume and start to reverse it on the bullish momentum. Then we have a bullish to bearish reversal. But it's not just identifying a head and shoulder pattern, it's also having the right candlesticks close below that support neckline, because again, it could be just a breakout. It could be an impulse red candle breaking that neckline, and then you enter on impulse, and then all of a sudden it hits an area of demand, and then it gets rejected and coming back up as a hammer candle, and you're in drawdown again. Yes, it is a head and shoulder pattern, and it has a high probability of reversing the bullish momentum, but that's not guaranteed. These are just physical patterns in the market. I see head and shoulders 100 times a day. Does that mean that 100 times of the day that these are going to work out perfectly and go into a sell setup? No. Sometimes they're fake outs. So you also have to understand that markets have fake outs. Even if you identify a pattern, you identify a high probable setup, that doesn't mean it's guaranteed to 100% be profitable. There's also, you got to understand the deeper behind the scenes in the markets. It knows that there's a lot of orders there that want to sell. So if I was a market maker, I would fake out the market, come down there, fake out all of that volume, and then go the opposite direction. So it's happened to me a million times. Like, the market makers have faked me out. So then I said, okay, I'm picking up some clues that these are not always guaranteed setups, okay? But what we got to do is we got to wait for body of volume to close below there. I need to wait for a red body to physically close below. Even if I've identified the head and shoulder pattern, I still need to identify a red body candle that can close below that support line, so that the whole depth of market can start to change now. Maybe that neckline that was support for a few hours is now possibly going to turn into an area of supply in the next few hours. It might get retested. Maybe then if I start to see it get rejected and rejected, then I have better understanding that the head and shoulder pattern is going to turn into a reversal pattern, and then maybe that is lining up myself for a high probable sell setup. Okay. Let's just continue. Let me just grab a little sip here of Gatorade. So types of entry techniques continued. Number 4, news events. We have news events constantly in the markets, Monday, Tuesday, Wednesday, Thursday, and Friday. Okay, we had news this morning. There's going to be news next week. How do we trade news? How do we avoid news? Do we go all in on news? What do we do? Some sniper traders focus on specific news events or economic indicators that can lead to volatility. They prepare to react quickly to these announcements, seeking opportunities that others may miss. So some news events, some traders look forward to trading, but they're trading with specific criteria, what they're looking for. If you are a beginner trader, I would avoid trading news at all costs. Okay, not just news. I don't mean just FOMC, NFP, CPI, PPI. I mean any news or market open. We had a gentleman on yesterday's call saying for the last 4 years he's traded Dow Jones, Wall Street market open, and he's lost every single time. Okay, so not just news events, but also big session market opens. Okay, you've got Wall Street, 9:30 a.m. Eastern every single day. You have Power Hour, 3 p.m. Eastern every single day. The last hour of the markets is a pretty volatile hour. You have futures market open up 8, 9 p.m. Eastern. That's another volatile time. You have London market open and pre-market London 2, 3 a.m. Eastern, and then you have your 8:30 North American news. So you got to know what day you're trading, what news is there, how you're going to go about it. Are you going to increase your risk when there's news? Are you going to decrease your risk when there's news? If you're trading in Wall Street market open, are you decreasing your risk or are you increasing it? If you're increasing your risk on Wall Street market open and you're suffering from the losses, you're putting that on yourself. You're the one that's increasing your risk during Wall Street market open. Okay, I suggest not doing that. I suggest going in with a better plan. I suggest going in with minimal to lower risk until you identify how the market is moving, what structure it's creating, and then trade after. Look for those high probable setups after the news or market open. Okay, it's all about being a sniper. It's about being calculated. It's about what we've been talking about being patient, about being disciplined, avoiding all of that market volatility when you don't need to be trading at that specific time. That's why I also have a plan. I try to avoid being in a trade at all costs leading into major news or market opens. Okay, there's some times where I'm in a trade, I've been holding it for hours, and now it's Wall Street market open, but that's where then I'm learning to reduce my risk. I might be bringing my stop loss up. If I'm in profit, I might be trimming some profit. I might be scaling out of it. Guys, this is not the end of the webinar. We got a part 2, but this is just in summary of everything that we just talked about right now. So a sniper in trading refers to a trader who approaches the market with precision, patience, and discipline, aiming to execute high probability trades at optimal points. This methodology emphasizes the importance of thorough analysis, risk management, and a strategic trading approach, distinguishing sniper traders from those who take a more haphazard or reactive approach. Okay, so we're going to continue right now, moving into part 2 of this. So I'm going to now break down the types of entries we talked about. Breakout trading, we'll talk about pullback trading, we'll talk about strategies for pullback trading, we'll talk about some examples, and then we'll conclude it. Okay, so breakout trading. entry point. So traders typically enter a buy order when the price breaks above resistance, or a sell order when it breaks below support. Okay, so those are your entry points. Whether you use a market execution or you use limit transactions, that's your choice. But make sure. Sorry, let me just read right here. I was reading. I got a slide ahead of me. Okay, so number one, breakout trading is a strategy used by traders to capitalize on price movements when the price of an asset breaks through a defined level of support or resistance. The main idea behind breakout trading is that once the price breaks out from these levels, it will continue to move in that direction for a period of time, giving traders the opportunity to enter a trade at the beginning of a new trend. Key components of breakout trading include, okay, so let's identify these components of breakout trading. Identifying levels. Okay, so yesterday we did an entire 2-3 hour session at identifying specific supply, demand, and consolidating levels. I hope you guys watch yesterday's live this weekend if you can, because there's a lot of good information. That was a webinar in itself on zones. And then if you don't watch the video, and then when we're doing it live, you might have a lot of questions. I guarantee you all your questions can be answered in yesterday's session. Every single session we do, I just want to make it clear, is a live education. It's every single session, but there's some that are more specific to exactly a topic, and that's what we're talking about. But every single live session is a webinar in itself. Like, we're constantly educating what we do. Like when I do a top-down analysis, every single day we're doing it. It should be you're educating you on how to do a top-down analysis. Identifying levels. So traders look for key support and resistance levels on charts. And what I mean by key support, like these levels should be sticking out at you. Like they're easy to identify because they've been tested over time for a period of time, and they're holding that level. So you need to look for these. Okay, they're not gonna just appear to you. You have to find these zones, and they're pretty easy when you know exactly what you're looking at. Which are price points where the asset has previously reversed in direction. So also volume confirmation. A breakout is often considered more valid if it is accompanied by higher trading volume, indicating strong interest and commitment from traders. So if you're trading candlestick bars, you can also add a volume profile. You can add volume bars at the bottom of your chart, and you can actually see the type of volume. So if I have a breakout impulse candle and it's on relatively low volume, then that's telling me something. It's something it's registering in my brain. There's a breakout, but it's on relatively low volume. Do you think that that's going to continue in bullish direction? Probably not. That's going to be probably an impulse candle that's breaking out, but there's no follow through. There's no volume following through. So it's easy for a seller to reverse that momentum and keep selling. Okay, it looks like a failed breakout. So start to add volume, some sort of volume analysis in your trading. Okay, and then use it side by side with your price, with your candlesticks, your price action. The two complement each other very well. Okay, it's not like they're going opposite of each other, but they do complement each other. And there's also some clues that you can figure out of like divergence and things like that with the volume. Okay, but what other case scenario? If we get a breakout with a bar that closes above that structure, and then we look at the volume profile and it's a fairly large green based volume candle, then that's telling me a little bit more information. Not only did the candle break through the resistance and close above, but now I'm looking at the volume, and the volume is also confirming that there was a big move. There was a lot of commitment. There was a lot of interest from buyers, not just myself, but other buyers in the market. Okay, so the two of these are very nice to use together. Okay, so get to know, if you're not studying volume right now, get to understand volume. Okay, you have to understand when we go into price action, the next thing is, like, guys, I'm going to tell you, like, okay, the first 10 webinars of our SST Super Series are these. Okay, it's introducing number one, um, like tape to tape trading. It's introducing technical discipline in trading. It's introducing what is a sniper in trading. Next week we'll be introducing the history and what is price action. After that, I'm going to introduce to you what is a candlestick. Just one candlestick, what it is. And then the next step after that is the candlestick is built with volume. Okay, some candles are bigger than others. Some candles have a bigger body. Some candles have a thinner body. What does this all represent in price action? So this is where I know it might seem very simplistic. This you guys might be saying, "Oh my God, this guy is showing a candlestick. Like this is pretty basic stuff." But no, a candlestick has so much hidden stuff behind it, behind the scenes. That's why there's footprint charts. That's why there's volume profile analysis. That's why there's a depth of market. There's so much more that goes into just identifying a hammer or bullish engulfing candle. So we're going to slowly introduce the way how to really evolve. And all of these things I learned later after losing all my money in the markets, after struggling. So that's why we're trying to do this in approach, this education, learning from all of our mistakes that we made, and giving it to you properly. How if I was to start trading again today for the first time, everything that I've known and I've accumulated over the years, this is how I would go about it. So it's this is the proper approach to learning the markets, in my opinion. Someone might say, Ron, you're completely wrong. But this is my opinion. This is for me, because I didn't learn these things at first. Okay, I didn't. I learned all the materialistic things about trading. You're going to get rich. You're going to buy a Lamborghini. You're going to have this lifestyle. You're going to just buy here and sell here, and you're going to make so much money and this and that. None of that happened. All the opposite of all that happened. I believe that this is more important stuff. Okay. So let's just continue with breakout trading. 3 entry points. So traders typically enter a buy order when the price breaks above resistance, or sell order when it breaks below support. So again, this is just, we'll talk about these. So you can place limit orders, you can take market executions. That's completely up to you. We'll talk about this. Everyone has their style and their preference, okay? But I will give you the options and we'll decide what's best for everybody. I personally like taking market executions when I'm scalping the markets. There's a reason for that, and I'll get into that when the time comes with you guys. Stop loss orders. You have to use some sort of stop loss order in the market. If you're not using a stop loss, then you must have some sort of experience that you understand the implications of trading without a stop loss. Okay, and I believe that we're all adults here, so I'm not here to tell you what to do, but if you're trading as a beginner and you have no stop loss, you're setting yourself up for a lot of financial damage. To manage risk, traders often place stop loss orders just below the breakout point for long trades or above the breakout point for short trades. This helps protect against false breakouts. So there's different criteria of how to set a stop loss. Some traders set it a certain percentage. Some traders set it as a certain pip, ticks, or points. Some traders just go with overall structure, and that determines how much they'll be risking in that trade. If the structure is a little bit larger than normally, then I know that there's more volume being traded right now at this moment in time. So then my stop loss will be bigger if I'm using the same size that I used yesterday where the structure was smaller. So this is where I need to manipulate my stop loss. I might have to reduce my risk to allow it for more room to breathe, because the structure is showing me like sometimes when I trade, I place my stop loss below the previous structure. I don't know today if US 30 structure is 20 pips. I don't know if today's structure right now is 40 pips, depending on the volume. So if I just continue to trade with my 20 pip stop loss, thinking that structure is the same every single day or at a certain time of the days, then I'm more inclined to get stopped out when the volume is trading heavier, because the stop loss might have to be 40 pips to cover the structure. So you see how things can change every single day, things can change every single hour, but I'm still sticking to the plan of placing a stop loss under structure. But I don't know until I do my top-down analysis the size of that zone. That's why I use my measuring tool to always understand, is it a 20 pip zone? Is it a 30 pip zone? Is it a 40 pip zone? But there's a lot of context that goes behind to properly place a stop loss. And then risk to reward. How much are you looking to get out of it? A 1-to-1, a 1-to-3, a 1-to-5, a 1-to-10. That's up to you. Some traders don't believe in risk to reward. I've even seen traders trade with negative risk to reward. I had no idea what the hell this was until I seen some YouTube people streaming and saying they're risking 100 pips to make 10 pips. Think about that. You're risking 100 pips to make 10. Okay. Yes, you might have some consistency. You might have multiple days where you get 10 pips, 10 pips, 10 pips. But what about one of those days where the market says it's one of those FU candles and gets you caught in there, and you're down and draw down 30 pips, it's pulling back, it keeps going lower, you're down 50, and then it takes out your 100 pip stop loss for just making 10 pips. Everything that you earned for 1 week, 1 month could be washed out in one trade. That is really reckless trading, but that's up to you if that's something that you utilize. But what I would do is I would back test that 100%. Anytime you're using new risk management, always back test before you test it live with real money. Target setting. After entering a trade, traders often set profit targets based on previous price behavior, technical indicators, or risk to reward ratios. Okay, so it's all about being like a sniper in the markets. It's, you know exactly where to enter the trade. You should know exactly where to exit the trade. Okay, this is just common basics of technical analysis. If you understand where one zone is and you know where the next zone is, maybe you need to have a trading plan if your targets from one zone to the next zone, and what you do when it approaches that zone. Okay, again, we'll have a webinar explaining these different things. You don't need to close the entire trade. You can start to do things. Number one, bring your stop loss to break even. If you go to a next zone and you're in profit, manage your risk by reducing your stop loss, bringing it to break even. You have no capital at risk. What I mean by that is your money is safe. You're now in a profitable trade. Your profit is at risk, but there's also rules how to protect your profit. What to do there. So you can have a trailing stop loss. You can trail it halfway so that if it comes back, at least you've secured that amount of profit. There's a scale out approach. When it's approaching an area of resistance that you've identified, maybe take out 50% of the trade, maybe take out 80%, leave the rest running with a break even. The more you do this, the more over time your runners will compound and you're securing 80% of profit. And if you really want to see your account grow over time, you're going to start to see it grow naturally over time. And while you're always accumulating profitable trades, the days when you do take a loss, your account is growing. It's like a trend. It's like making higher highs and higher lows, higher highs and higher lows over time, over 1 week, over 1 month, over 3 months, over a year. That account will start growing. So then when you're taking, like if I take a loss right now, okay, for example, I've been accumulating my account for the past 15 years now, and I have multiple trading accounts. I don't just have one account. I have accounts for various things. If I'm trading stock and options, I have a separate individual account for that. If I'm long-term investments, I have a separate account for that. If I'm trading Forex, I have a separate account for that. If I'm trading like a growth account where I'm growing it, I have that account as well that I've been accumulating for the past 15 years. So that account is growing. If I take a loss right now, if I go in the markets and take a loss, I'm still ahead of the game. Okay, so I'm still trading with a lot of my profitable money. So my mindset is completely different. I know that if I take a loss today, I'm not losing my capital. I could lose a little bit of my overall profit that I've been accumulating for the past 15 years. So this is where the psychology is different for some traders who have been doing this for more than some traders who just started today. Okay, so this is what, once you get that snowball rolling, you know, when you get a snowball, soon it's going to be snowing here in Canada, and I'll show you guys when I make a big snowball outside my house. You start it and you start rolling it, and that snowball starts getting bigger and bigger and bigger and bigger to the point where it's bigger than you. Okay, so that's, think about your account with that type of analogy. If you keep accumulating and keep taking profitable trades, pipping and dipping, getting money and growing that account is going to grow, it's going to grow, it's going to grow, it's going to grow, where naturally allows you to increase your risk now with more confidence at your trading. You're getting more experience. So now maybe you're going to allocate a little bit more risk. Those nice trades that you were making a few dollars now they might be making $10. Those trades, same trades, might be making $100 in the future. And hopefully maybe you'll hit your first comma day and hit $1,000 trading day. And some of you guys may be a 10K day. Maybe there might be someone in the group who hits 100,000 a day. Who knows? You know, only time will tell. If you continue to do this for the next 5, 10, 15, 20 years, you might have those days. Okay. Right over here, breakout trading can be effective, but also carries risks. Okay, everything we do, not just breakout trading, anything we do in the financial market carries risk, financial risk. So make sure you understand a little bit about financial risk. Okay, because this is not a casino to gamble. Okay, most traders are trying to do this because maybe for enjoyment, maybe for a side hustle, maybe they want to learn all about finance. Maybe some traders do this because they have nothing else going on. Maybe they lost their job and they need to figure out a way how to make some money to pay the bills at home. But you got to also understand that it carries heavy risk. You have to understand risk management. Okay, to last long term, you got to have some sort of plan for risk management. If you don't, you're probably not going to be that successful over time. Okay, especially in the case of false breakouts where the price moves briefly past the level but then reverses. As with any trading strategy, thorough analysis and risk management are essential. Okay, let's just continue with pullback trading. Pullback trading is a trading strategy that involves taking advantage of temporary price retracements within a prevailing trend. Instead of entering trades at the extremes of market movements, such as the highs or the lows, pullback trading focuses on entering trades during short-term reversals that follow a preceding trend, allowing traders to buy at a lower price in an uptrend or sell at a higher price in a downtrend. Okay, so just bringing this back as to what is a sniper in trading. So maybe a sniper understands that it's not the best to buy the highs or to sell the lows. Maybe it's best strategy to wait patient and take the trades or take those shots when it's pulling back into a nice level of a fair value gap. And maybe you'll have more success taking those trades as opposed to the extremes. Okay, so key concepts are trends. Uptrend, characterized by higher highs and higher lows. In an uptrend, traders look for buying opportunities during pullbacks to the downside. So you're always looking to maybe get involved on a pullback at an area that used to be resistance that is now created support now. So it broke out, it made a new higher high. The market is trending uptrend, and now it pulled back, allowing you the opportunity to get in where the depth of market is now building as an area of support. You could find a fair value gap with a lot of pending orders that never got triggered on the first up move. So this might be the opportunity. And you might find out that you're taking a trade here. And again, this is with precision. You've been patient. You've been disciplined. You're allowing the pullback to come to you. It's came back to you at a certain area. You take the trade with proper risk management, and you may see that this trade maybe it starts to move directly right into profit with minimal to zero drawdown. And it's kind of addicting when you start to take these type of trades, because then like, it was this when I first started learning these concepts. And because before I was just taking trades and every single trade was going directly right into drawdown. We talked about this. Then I had to figure out, why am I taking trades, every single trade, and every single trade is going in drawdown? It's because I was doing this. I was buying the extreme highs and I was selling the extreme lows. So it was going in drawdown. Then when I started to figure out, okay, maybe I wait for more context. Is the market trending? If it's trending, it's gone without me. The bus left the station, but there will be another bus that will come pick me up. I just got to wait for it. So as a sniper, you continue to be disciplined, patient, calculated, wait for that opportunity. Then when the opportunity comes, you take the shot, you go for the trade, you take the buy. And yes, it's not always going to go right into profit. There's going to be times where sometimes it breaks that, but that's why you have a stop loss at an area of structure to help let it breathe and build in that area. Okay. Downtrend, it's the same opposite. So characterized by lower highs and lower lows, and the downtrend traders look for selling opportunities during pullbacks to the upside. So if you see the market is selling off, if it's making lower lows, lower highs, lower lows, lower highs, instead of continuing to sell those extreme lows, maybe wait for the buyers to bring it back up to an area of resistance. And then when you're looking at context on the charts, maybe an area that was previous support with the volume, red volume closing below, is now turning into resistance. Stretch it into the future, extend that zone, and then now if the green volume is coming in there, that's where the sellers are probably accumulating, and that's where their market is going to continue to maybe push down. That could be your entry to sell the market and place your stop loss above zones above you. Okay. Pullback trading. So pullback is a temporary price movement against the prevailing trend. It can occur for various reasons, including profit taking by other traders or market corrections. So you always got to think, when you're selling high and it's coming to an area of support, we talked about this also yesterday. There's a transaction that needs to be made. In order for the sellers to get out of the market, they have to exchange and shake hands and transact with the buyers. The buyers are inclined to be in the demand zones, support zones. So if you're in a sell and you're trading zone to zone and it's red volume filling all the way down to that green box, it should be triggering something in your head saying, this is where a transaction is going to take place. All the sellers need to find a buyer to close a trade. And when they close the trade, they make money. They're profitable, selling high, buying low. Okay, so you gotta register that. It's not always going to break, because there could be a big order of buyers there waiting to accumulate where those sellers are going to close their trade. Then with that being said, that is a support area. The sellers are closing their positions, the buyers are buying, so that might bounce where it's green now, coming right back up to the red box. We saw that yesterday on the 1 minutes on right near the end of the call on US 30. So when you learn that, that's going to help you understand that where to exit or how to scale out. How many times have we been trading where we're in profit, comes to the zone, and then it bounces and goes exactly where we entered, and it's either a break even or it goes for a stop loss. And then we're scratching our heads after saying we were up 30, 40, 50 pips and we just gave it right back to the market because we didn't do anything at that specific zone where we needed to do something. I'm telling you, as a calculated sniper, there's always something that needs to be done. And then again, it's personal preference. You do not need to close the entire trade out. You don't need to. But there's a certain routine that you should be doing. Taking your stop loss, bringing it to break even, reducing your own capital, reducing your risk. That's number one job as a trader. Making money is secondary. Protecting your capital is number one. Let me just make that clear to everybody here. If I put in $1,000 in the market right now to trade, my goal or my what I have to do is protect that $1,000. That's coming out of my pocket and going into the financial markets. I need to protect that. If it goes to $1,100 and I make $100, my capital, 1,000, is protected. Now I need to learn how to protect my profit. Profit is secondary. There's rules how to protect your profit. You can Use a trailing stop loss. It's very simple. Use a trailing stop loss. You can set it a certain amount of ticks, pips, or points to trail behind. You can set it a certain percentage behind. For example, if I go up 1% on a trade, I'm up 1%, I'm profitable 1%, I can set my trailing stop loss to trail it behind 0.5%. So it's 50%. If that trade continues to trend and it moves to 1.5%, automatically my trailing stop loss will move to 1%. If this trade goes to 2%, the automatic stop loss will come up and protect you at 1.5%. Okay, most banking institutions, when you're trading the stock and options world, they allow for this, and it's an automatic setup. Some of you guys might be doing this already in Forex and futures, or using some type of trade manager to do this. It's a fantastic tool. You just got to understand psychology that if the trade comes down and taps you out, you're out of the trade. And then a lot of traders get discouraged. Oh, I wanted more, or I wanted more. And the greed factor. Who gives a shit? You still locked in 1%, 1.5%. Let's look for another trade. Let's keep compounding. Stop caring if it could have done this, it would have done that, should have done that. That's all BS. Okay? You gotta trade in the moment of time and what is actually happening, not what could have happened. There's a trade I bought yesterday. Yeah, it could have gone up 300 pips, but it didn't. It only went up 30, so I still locked in 20 pips. Okay, because when I looked back at it, it reversed on me and would have hit my break even. So at least I locked in a little bit. But yeah, I wanted 300 pips out of that trade. Everybody does, but that's not always going to happen. That's not the real world, guys. Okay, so understand what you're doing in these markets, and always have a consistent daily plan. So if I take a trade and I go up a certain amount, I know exactly what I'm doing. Whatever security is, whatever day it is, whatever time frame, it's just automatic built into me. It's a process. It's kind of like a computer process. It's kind of like an automatic trade manager. I'm my own automatic trade manager. I know exactly what to do because I do it every single day. It's a routine where I can do it with my eyes closed, where you guys should be getting to the point where you guys should be doing this too. Everything should be very automatic. You reduce your emotions. You're not trading on emotions. When I'm going from one level to the next level, from support to resistance, from resistance to support, it's all automatic. I don't know emotions. I'm probably, I've said this to you guys a lot. I'm a trader with zero emotions in the market. Whether I'm making money or I'm losing money, I don't think you guys can tell the difference because I don't get emotionally involved in my trades. I don't get attached to these things. I'm a scalper. I want in and out, get my money and get out. I don't marry my trades. Okay, I don't marry my positions. Those are for long-term holds. But the positions I marry are Apple and Nvidia and the ones that can change the world. I don't believe that I'm going to marry like Dow Jones. I wouldn't be doing it in Forex, number one. I wouldn't be holding positions there. I would be doing it more in the markets if I'm going to hold for long term. Okay, so risk management. Make sure you guys are learning all about this. Identifying the trend. Make sure you guys can identify the trend. It should be coming very easy now. The market only has 3 trends: uptrend, downtrend, or sideways range. Okay, and then know what type of trade system you should be doing. For example, if you tell me, Ron, the market is trading sideways right now and it's consolidating, I have already a strategy how I'm going to trade it. I'm either going to allow it to accumulate, I'm going to box it in, I'm going to trap it, I'm going to wait for volume to break above or below with confirmation, or I'm just going to measure the size of the zone and I'll trade inside the zone, just pipping and dipping in there. I'll be buying the supports, selling at the resistance, selling resistance, buying at the supports. If there's enough, if it's more than 10, 15, 20 pip zone, okay? If it's really tight, avoid it at all costs. Okay, you know, you guys are smart enough to realize now that the market is accumulating, that volume is accumulating and will be redistributed. It's just will be redistributed to those who are patient and disciplined and wait for it. And when they redistribute it, you have to know that they'll fake you out. It might be an impulse that gets rejected. We just talked about that for 1 hour before this. So you got to know, you got to have rules for impulse trading. It could be a break. It could be a candle that breaks out with high volume. You're looking at your volume profile as well, closes above. Now you're waiting for your natural pullback retest, and that could be it. And then that turns to be a profitable trade. So, okay, so identifying the trend, I did that. Waiting for the pullback, I just stated that. Traders look for the price to retrace back to support level in an uptrend or resistance in a downtrend. Entry points, once a pullback has been confirmed, traders look for a suitable entry point, which may include, just spoke about this, buying at the support level during an uptrend. Okay, on a pullback, you buy at the support level. This was not a support level before. It is now, because the prior higher high broke through a resistance with the volume closing above, but you're not chasing that FOMO move. You're waiting now for the pullback. So you should be automatically flipping that resistance red zone to green box. Now you allow the volume to come down to the green box, and that's where you're buying. You're buying the pullback at a supporting area in the market now. That was previously a resistance area. Okay, that's the depth of market changing. Same opposite, selling at a resistance level during a downtrend. Entry signals may include candlestick patterns. Okay, so get to know your candlesticks. Very, very important. Make sure you understand a bullish engulfing in an uptrend. Make sure you understand a bearish engulfing in a downtrend. Okay, but don't just stop there. Everyone knows what a bullish engulfing candle is. How do these things open? They can open ignited. What is the context between an ignited open? Did they gap up or gap down this bullish engulfing candle? That's another clue. So I can just talk about a bullish engulfing candle for 3 hours, because there's so much criteria behind this. How much volume is in, how much bars previous did it engulf? Did it engulf one red bar? Did it engulf 2 red bars? Context. Also the volume. Is it high volume when it's engulfing? So a lot of context behind this. Also get to know your shooting star and your hammer candles as well. They're very, very important. And guys, I want to ask you a question at the end of the call, okay? So I need to write this down so I don't forget, because it's got to do with candlestick, okay? Let me just write this down. It's going to be a fun little question for something to think about over the weekend, okay? Let's continue. Stop loss and take profit. Stop loss. Place just below the recent swing low in an uptrend or above the swing high in a downtrend to protect against unexpected reversals. That's having a very tight stop loss. If you're just placing it immediately right below the swing low or the swing high, if you're in a buy or sell, maybe look at certain structure and place your stop loss there, okay? Take profit, guys. I don't know why this is so difficult for traders to take profit out of the market. I don't know if it's a greed factor or I have no idea what it is. I'm still trying to learn from you guys. I have no issues taking profit out of the markets. I've learned this from years ago, that why am I spending 1, 2, 3, 4, 5 hours in the markets if I'm not looking to take profit out of profitable trades, and then I give it right back to the market? So not only did I lose money, not only did I lose my profit, but I lost 3, 4, 5 hours in the markets. You know how pissed off that could make you? You spend 3, 4 hours in the markets, you make some profitable trades, and then you're scared to take profit. Why? Because we want more. We want more and we want more. And then the market punishes us and we end up with nothing. We end up with making no money and we end up with losing 3, 4 hours in the markets. Okay? So get in the habit of learning to take some profit. It's going to help with your psychology. I can't express that. If you're taking trades and you're starting to see your account grow, even if it's a couple dollars, okay? It's just psychological. You're seeing it grow, as opposed to seeing it shrink and losing. Okay, you're gonna feel better about yourself when you're taking profit out of the market. You're gonna start to feel better that your account is starting to grow. Maybe some of you guys haven't seen your account grow in years, and now you're gonna see it start growing. Then you might be now doing more journaling on your profitable trades and learning at the setups now, as opposed to just learning from losing trades, because now you're on the more profitable side of trading. There's so much behind the scenes and psychology that is involved in taking profit. Again, it's your choice. You don't need to close the entire trade. You can use a trailing stop loss. You can close 75% of the trade in profit at a key area and leave 25% running. There's so much we can do, but please, guys, learn a little bit how to take profit, okay? Let's just talk quickly about one example of a pullback trade. Okay, so there's a bullish pullback. There's a security called example DEF Tech. The trend is uptrending, so the stock price moved from $50 to $60. Okay, so it was a $10 increase in value of this stock DEF. Pullback scenario. After reaching $60, hitting the resistance of $60, the security pulls back to $55, which is the previous support level. So your entry point, the trader identifies this pullback as a buying opportunity and enters a long position at $55. So you're buying the pullback. You're not buying the high at 60. It started to move from 50 to 60, pulls back into $55. $55 is that psychological 50% marker. So that's where it could be a good opportunity to enter a buy position and place your stop loss. Order is set at $54, so just below where you entered. That's just $1 below. If you want to give it more room to breathe, I would suggest putting the stop loss below $50, the demand level. And your take profit. And then the trader sets a target price of $65 based on previous resistance levels. Okay, so this is just a quick little example of just a security trading from $50 to $60. Would you buy at 60 or wait for a pullback at 55? If you enter at 55, your next thing is to set up a stop loss. Either at 54 is pretty tight, but maybe at $50 or $49, and then you want to come back up to $60. So if you bought at 55, you're now $5 in profit, but now with more volume and more buyers, you're going to break this 60 level, and then you go to your next resistance, which could be 65. So on that trade, you make $10. Okay, there's a couple examples here. I don't think I need to go through all of these. Same thing, bearish pullback. 45 is the price. It's moving down from 45 to 30. After reaching 30, the stock retraces back to 35. The trader sees a retracement and selling opportunity and enters a position at 35. You're placing your stop loss above $35, like 36 or 40, and you're looking to short the market to come back down to 30, break, and go down $25, where you make money short selling. So some tools used in pullback trading. These are some tools that some of you guys use. Some are better than others. Again, tools, indicators, they're just there to help complement your price action and your overall analysis on the charts. I would not, and I say this again, I repeat, I would not just trade off of technical indicators like RSI with no chart or price action or levels, because these do give a lot of false signals and you could make a lot of mistakes. Okay, so technical indicators like RSI, relative strength index, moving averages, EMAs, SMAs, Fibonacci retracement levels are a fantastic tool. MACD is another one. These can help identify potential pullback opportunities. And then also look for your specific chart patterns. Look for your flags, your pennants, or channels. Just start to understand that everything is a piece of a puzzle, and when you start putting all these pieces together, it can start to make a lot more sense. Okay, so advantages of pullback trading: there's better entry points. I like that. So if I can get a better entry point, that's a positive, as opposed to buying at the worst time, buying the extreme highs or selling the extreme lows. Why not just wait for a pullback? A healthy pullback, that's a better entry just right there. Allows traders to enter positions at more favorable prices rather than chasing the trend. Risk management, traders can set clear stop loss levels based on recent highs and lows. Increase profit potential. By entering during pullbacks, traders can capitalize on the continuation of the primary trend for potentially larger gains. So conclusion in pullback trading can be an effective strategy for traders looking to enter the market at a reduced risk during established trends. It requires patience and discipline to wait for proper setups and confirmation before entering trades. Proper risk management and a thorough understanding of market conditions are crucial for successful pullback trading. As with any trading strategy, practice, backtesting, and ongoing education are essential to improving skills and increasing trading effectiveness. So this all ties into what does this have to do with being a sniper in the markets? A sniper looks for pullback entries. A sniper is very calculated with their decisions. A sniper looks for the best case scenario to get involved in the markets. So it's best to get involved on a pullback, okay? Because you're already buying at a discount and you're buying where there's relatively high volume looking to buy with you. And with all of that volume and buying at a specific area, then it will minimize the drawdown and the trade might start to develop and accumulate and start to go back up to the previous resistance. So when it gets back up to the previous resistance, you're already in a profitable trade. You're already in the money because there was previous traders who bought the extreme highs. So when it pulled back, they were in drawdown, but you are waiting patiently to buy the pullback. So you're buying and you're not in drawdown. There was other traders who bought the highs that were in drawdown. They might be even taken out of the trade if they risk too much. So now you're buying at a good level, and the objective is to come back to the prior high, and that would put you in profit, and to break out and create a new higher high with the uptrend that's already established. And then your job is already, you're in profit, stop loss to break even, start to scale out a little bit, or watch how the trade develops. Maybe now it's breaking through a resistance area, volume closing above, you're already in a profitable trade. Change your zone from red to green. Yes, it might pull back. You might give a little bit of profit away, but you're still in a profitable trade from where you entered. And then it might respect that area again. It might accumulate more buyers, get in more pullback buyers that are buying now the new higher high. And you're already involved in that volume, and then it might go back up to the previous high and break out again. And then a simple trade that goes from 10, 20, 30 pips can now turn into a 50, 60, 70 pip move or more. Okay. So let's just talk about quickly some reversal patterns. Reversal patterns are important concepts in technical analysis, signal a potential change in the direction of the price trend. These patterns typically form after a strong trend has been established, indicating that the prevailing trend is losing momentum and that a reversal may be imminent. Traders use these patterns to identify potential entry and exit points for their trade. So key concepts, trend definition. Make sure you guys are identifying the trend. If I ask you guys right now, I'm not even looking at a chart, what is US 30 doing? Is it on the 15 minutes? Is it trending uptrend right now? Is it trending downtrend, or is it trading sideways? 15 minutes Dow Jones. I'm not looking at a chart, but if I was to ask you guys, would you guys be able to tell me what Dow Jones is doing right now? On the 15 minutes, what trend it's doing? Some of you guys can tell me clearly exactly what it's doing. Some of you guys need more work on this, okay? So uptrend, it's consolidating. Perfect. Efren. Awesome. So now, like, I know exactly what you're saying. Okay, I understand consolidation. Market is trading sideways. It's accumulating. So if I was looking to trade right now, maybe I'd be a little bit cautious. Maybe if Efren can tell me a little bit more, what is the prevailing trend? Like, what it's consolidating right now, but was it trending before this consolidation? And then that can help. That can help me understand: is it a bear flag? Is it a bull flag right now? It was bullish. Okay, perfect. So it was bullish. We made some higher highs, maybe a pullback. Maybe now it's just trading, and maybe we're going to continue to accumulate some more buying volume and break out and continue to the upside. Okay, that's just an analysis I'm just getting from Efren, just telling me what the trend is right now. Okay, so see how my brain is kind of just taking that in and understanding what could happen. So uptrend characterized by higher highs and higher lows. If you cannot identify an uptrend, you got a lot of homework to do this weekend. Okay, this is pretty basic stuff. When we're talking about price action 101 and the basics, this is like you're in kindergarten, grade 1, grade 2, grade 3 level. Okay, this is, you need to understand this stuff before you move on to more advanced concepts. Downtrend, it's very simple. It's the opposite, characterized by lower lows and lower highs. A reversal pattern suggests that the price movement is likely to change from bullish uptrend to bearish downtrend. Okay, so some psychological factors. Reversal patterns often occur due to shifts in market sentiment, where buyers or sellers lose conviction in the prevailing trend. So if you're sensing that sentiment is changing in the market, then look for your reversal patterns. Okay, don't just look for them, but look for confirmations. Look for volume to close below critical areas. Okay, look for that pullback. Don't just look for impulse trading. Confirmations. Not all reversal patterns result in a trend change. Traders often look for confirmation signals, such as volume changes or other technical indicators to validate the pattern. So your common reversal patterns, you guys should be well aware of these. Again, put a check mark if you understand a head and shoulder pattern. Put a check mark if you understand an inverse head and shoulder pattern. Put a check mark beside a double top. Put a check mark beside double bottom. Put a check mark beside a rounded bottom if you understand these. These are your most common price action reversal patterns. They're very easy to identify, but don't just know what a head and shoulder looks like, okay? But understand the context behind what is going on in the left shoulder. What is the head? What does that symbolize? What is that? And then also the right shoulder, and know what this means. Like, why is this making these shoulders, these resistance levels? What was the objective of the head that broke out? All of these things. So that's grabbing liquidity, coming back down, retesting the lows, and there's so much that goes behind this. Okay, so a description of the head and shoulder pattern is a bearish reversal pattern that typically follows an uptrend. It consists of the three peaks, two shoulders, the lower peaks, and a head, the highest peak. Okay, formation, left shoulder, price makes a high and then declines. Okay, so it pushed, found resistance, went back down. Then the head, the price rises above the previous high, the previous shoulder, and it breaks out for a new higher high, then declines again. The right shoulder is the previous left shoulder, so price rises again but does not reach the height of the head before declining. So the head is the higher high, and the right shoulder is equal to the left shoulder. So that's telling me that there's a level of resistance right there. The neckline is the supporting line drawn across the low points of the pattern. A breakout below this neckline confirms a reversal. So the market was moving bullish, and now it's reversing below the neckline, the supporting line, and then now the sentiment is changing where sellers are in control and maybe buyers have already scaled out. They've transacted at the highest points. They've closed out their trades in profit, and now the sellers are stepping in and reversing the move. Okay. So target the distance from the head to the neckline projected downward from the breakout point. So always use your ruler on TradingView or whatever platform you use to always measure moves. You probably have heard of the term measured moves. So if right now, Ephraim told me that US 30 is consolidating on the 15 minutes. If I wanted to right now, I would take my ruler and measure from the bottom to the top of that consolidating zone. So I understand how big of what the action is trading at. So let's say it's a 25 pip zone right now. Let's say US 30 is consolidating in a 25 pip zone. I can measure the projected move if it breaks out bullish or if it breaks down bearish. It should technically be minimum of a 25 pip breakout. Why? Because all of the volume that's consolidating is in a 25 pip zone, and all that's doing is accumulating more and more and more volume. So when it does break out of there, it should just be a measured move of what the consolidated move was, 25 pips. So that redistribution should be a minimum of 25 pips, if that makes sense. That's what's called a measured move. Okay. And then the inverse head and shoulder is the exact head and shoulders, but the opposite. This is the bullish reversal after a downtrend. Okay, so it's the same thing. I don't need to go over this again. This is for you guys. It's just the same pattern, just inverse. Double top we'll speak about. Double top is a bearish reversal pattern formed after an uptrend. It consists of two peaks of approximately the same price level. So why? Why? Not just identify an M top and two peaks, but why? This is telling me that the market is not rising any higher. It's not just by chance. It's due to the supply levels. There's more supply in the market at this particular time that the buyers cannot seem to break above. So the sellers are absorbing not just the first peak they absorb there, but they're absorbing at the second peak. And this is where they might be offering more because the second leg is more powerful than the first leg. So if you're looking to maybe sell the market, maybe get in a habit of selling the second top, or if you don't feel comfortable selling there, you wait for it to break the neckline, you wait for it to break the support line, but you don't just go in on an impulse. You wait for red volume to be confirmed to close below. Then you look for your pullback entry. We're going back to pullback trading. You'll get a better entry point if you wait for the pullback as opposed to just taking an impulse trade with no context of where it closes. Okay. Again, I don't need to read all this, pretty basic stuff. Double bottom is the same exact, but now we have two bottoms at an area of demand. The second bottom is the more powerful one. That's where probably more volume came in to accumulate there to take it out to break the neckline and then start the reversal pattern from the bearish to bullish reversal. Okay, so these are very common patterns. Some of you guys are nailing these. You guys are really understanding these patterns. Some of you guys are very disciplined to look for these throughout your daily trading, and this is all you need to do. If you feel comfortable trading double bottoms, double tops, and you're doing well, just continue to learn more and more and more about what's actually happening within the volume at these points, and we'll take your trading to the next level. Okay, rounded bottoms, we can talk about V bottoms. I talk about that. Those are sharp recoveries where the market just falls, but then it quickly comes right back up. Okay, so that's why sometimes if you're impulse trading, that's what a V recovery is. It just drops, recovers, and comes right back up. That's why it's important to pip and dip if you're doing impulse trading. Okay, so some important considerations in trading reversal patterns. Number one, volume. Always consider volume in any, not just reversal patterns, in any trade you are doing. Always consider the volume. I am a big proponent about volume. Remember, big body candles. I don't like little skinny indecision candles. They don't give me too much context on the volume. I like those big fat candles that show me the volume. And what I do is I'm automatic at looking at 50% of that volume. I use a cut line or I'll use a zone to identify where's 50% of that volume in that big base candle. It tells you a lot of information. Okay, so confirmation through increased volume during the breakout of a reversal pattern is crucial. High volume strengthens the probability that the reversal will occur. Time frame. Very important. While reversal patterns can occur on any time frame, short, medium, or long term, their reliability often increases on higher time frames such as daily or weekly. That's why a top-down analysis is key by starting with the daily, moving down to the 4-hour or hourly, and then moving down to the 30, 15, or 5-minute, and you wait for volume to react at the higher time frames, at the hourly or at the daily, and then you look for maybe a double bottom on the 5 minutes being built at the daily point of interest, and that's got more context behind it than just forming any area in the market. Okay, now it's forming at a daily area where daily buyers could be jumping in and buying this. Okay, so you want to buy with them. Risk management. It is essential to set stop loss orders just beyond the reversal pattern boundaries to manage risk effectively. This practice protects against scenario where the breakout does not lead to the trend reversal. Okay, market context, very important. Always consider the overall market or sector trends and news that might impact price movements. Reversal patterns are more reliable in favorable market conditions. So just a conclusion here on reversal patterns. Reversal patterns are valuable tools for traders looking to identify potential trend changes Understanding how to recognize and confirm these patterns can lead to more informed trading decisions. As traders become familiar with these setups, they can integrate them into their strategies alongside other technical and fundamental analysis tools. Effective risk management and ongoing education are crucial for success in trading reversal patterns. Okay. News events, really quickly. In trading, news events refer to the release of information that can significantly impact financial markets. These events can affect the prices of stocks, bonds, currencies, commodities, securities, and other assets. Here are key points about news. Thank you, Boom. Have a good weekend, man. Thank you. Thanks for joining. Types of news events. We have economic reports. These include data releases like GDP growth, unemployment rates, inflation, CPI, and consumer spending. We've had this week, these news events. Traders closely watch economic indicators to gauge the health of the economy. So if you see that how the market reacted, maybe this week review. What did CPI, how did the specific security be affected by CPI inflation? Did it affect the security you're trading? Did it not affect the security you're trading? Learn more about your security. Central bank announcements. Central banks such as the Fed Reserve or ECB, the European Central Bank, periodically announce changes in monetary policy. These are federal funds rates or interest rates. Or quantitative easing or tightening. These announcements can lead to significant market movements. We had a big movement when Fed Reserve decreased the interest rates half a basis point in the first time in 4 years. We're going to get another FOMC coming up in November. So we're going to see how that's going to impact the markets going into election, going into the end of the year. Earnings reports. We talk about this all the time. We got some big names reporting earnings. This morning it was all big banks. BlackRock, JP Morgan, Wells Fargo. Next week, next Thursday after hours, we got Netflix. So big names. So companies release quarterly and annual earnings reports, which provide insights into their performance. Better or worse than expected results can cause stock prices to soar or plummet. Okay, we talked about TD Bank the other day. They got a $3 billion money laundering lawsuit and they were down 5%. Tesla released the news on the robotaxi and they were down 5, 6, 7% today. Okay, so news, earnings reports can impact the securities that you're trading. Okay, so make sure you have a good understanding of this as well, not just price action. Geopolitical events, events such as elections coming up in one more month, trade negotiations, or conflicts like with the war going on in the Middle East can introduce uncertainty into the markets and influence trader sentiment. So this can influence the price of crude oil. It could influence the price of gold. It could impact the price of US dollar. So all of this stuff is very important. Okay, and then natural disasters. We just seen a natural disaster, hurricane in Florida. Category 5, like it was disastrous. Events like hurricanes, earthquakes, and pandemics. We came through a pandemic in 2020. Were you trading at that time? There was opportunities. There was so much opportunities. You know how people were wearing those masks. We researched AHPI was a Chinese company producing these masks, and they were trading at 40, 50 cents, and they went up in the peak to $42. If you were researching Moderna, Pfizer, Johnson & Johnson at that time, these were publicly traded companies. You could have looked at the charts and got in, and there's always going to be opportunities in the markets, but it's for those who are prepared and have a routine of what to look at. Okay, so all of these things can have immediate effect on specific industries, commodities, and overall market sentiment. Market reactions. Traders analyze news events to forecast how market will react. Positive news might boost investor confidence, while negative news can lead to sell-offs. Market reactions can be immediate or delayed. Okay, that's another thing. The market reaction might, they might release the news right now, but the market might just initially react with some volatility, but the real move might not be till tomorrow or next week. So sometimes the moves might be delayed. Sometimes traders may overreact to news leading to volatility. So that's why, guys, it's not a good advice to gamble with news events or trade with high risk. with news events, because you could do a lot of damage. It's best to allow the news to happen, allow the market to react, and then look for trades. News trading. Some traders specifically focus on news events to capitalize on volatility. They may enter trades just before or after an announcement, hoping to profit from the ensuring price movements. There are some traders that just trade news events. Okay, I'm not one of those guys. I watch news events, but I don't just trade specifically right at news. Okay. Unless everything is leading up to the event and price action is dictating the way how it's moving into the event, that's a different story. But I don't just get excited that maybe NFP is coming up and I'm going to just trade just because NFP. No, NFP comes every month. It's just another day. I've learned that. It's just another day with news. That's with the maturity of learning that these announcements happen every single month. CPI, PPI we had this week are going to happen again next month. FOMC that we had last month, it's going to happen again in November. NFP that we had this month is going to happen again. So we got to be aware of these news, but they keep repeating themselves. So I used to get excited for the news. Now I don't really care. It just became a routine in the markets. Always with earnings too. We've got financial earnings this week. They come every 3 months, every quarter, same thing. We're gonna have tech earnings coming very soon, where Nvidia is going to be having earnings. Apple, Google, Microsoft, all of these big names. It's a cycle we go through every 3 months. I get excited, but I'm looking for opportunities. I don't get excited and giggly just because Netflix has earnings. I'm looking for an opportunity to maybe start looking at the option chain to see, should I be going long on Netflix? Should I be shorting them? What are strike prices? What do I think is the implied volatility that is going to be affected by when they release? I know that they've been having a lot of difficulty with subscribers. So all of these things play into just getting in, looking at the Netflix charts. Risk management, we've talked about this the entire call. Okay, so if you guys don't understand risk management, I hope you guys do after this call. Tools for staying informed. Traders often use economic calendars to track upcoming news, events, and releases. You see here, we use free stuff. Forex Factory is free. Financial Juice is available. There's all kinds. Earnings Whispers for earnings is free, but there's others if you want. Bloomberg, if you want to pay a shit ton of money, there's Bloomberg. Some Bloomberg platforms are $1,000 to $2,000 a month, but you get up-to-date data. But how many of us are willing to pay $1,000 to $2,000 a month when there's good news available for free? Okay, it depends on what level of a trader you are and where you want to take it. Financial news services, social media, and brokerage platforms provide real-time updates and an analysis of market-moving news. Overall, understanding news events and their potential impact on trading is crucial for making informed decisions in the financial market. So, news is always going to happen, okay? And it could affect everything, okay? So, as a sniper, you got to be really dialed in and focused that if you see a setup, okay, let me repeat this. Being a sniper, if you see a high probable setup, but 20 more minutes that are going to drop some news, that may affect your high probable setup, okay? Understand what I'm saying. If you're a sniper on the military field and you see your target, but then there's other things happening, you might lose focus on that target because there's other things happening. So you might have a good intended shot there, but other things are happening around you that might take away from that. So the same thing with trading. I might be in a high probable setup, like looking at it, it's developing perfectly. This is a trade that I like to take 100% of the time, but I know that FOMC is 15 minutes away. So I know that that news event is going to affect that setup. Okay, do you guys understand what I mean by that? This is where I got to be maybe more calculated. I know that that high probable setup is there. It's a perfect setup. I take that trade every single day, but Now there's 15 minutes of high impact news that could affect that. So now I got to be disciplined to not take that high probable setup, allow the news to happen and see how those structural areas react to the news. If they're still holding, if they're still maintaining, then it makes my high probable setup even more, I'm more confident and I have more conviction to take this trade. Okay, so there's always context around a trade. Okay, guys, so with that being said, don't leave the call, because I had a question for you guys about a candlestick. If you could be a candlestick right now where you are with your trading, what candlestick would you be? Okay, so let me, the different type of candlesticks we have. We've got bullish engulfing. If you're telling me right now, like, your trading is at a whole different level and you're bullish engulfed right now, then that's telling me that, wow, like, something special is happening. Are you a spin top? Like, you were doing good and then you kind of came back down and then now you're right back to where you started. And guys, I'm asking this question of your overall trading experience, like not just where you are this week, where overall your trading journey, where would you say, what type of candlestick are you right now? I know it's a silly question, but it allows me to understand where you are in your trading. If you're struggling, you might be like a bearish pin bar. Maybe you had some good times, and then now it's going down. So we have to learn how to recover from this. How do red candles recover? They recover if you're a red candle and you're struggling, red candles recover in areas of support. Okay, so SST, we're here to support you. If you're struggling as a trader, we're your support. We're your green zone. We're your demand zone. We're here to help you. Okay, and to get you back to a bullish candle. If you ask me, my 20 years, what candlestick am I? Okay, I can tell you I'm a hammer right now, and nobody picked a hammer. I see someone is bullish engulfing. That's awesome. Even pin bar, gravestone doji. Oh no, I hope not. A bullish hammer, gizmo. Me and you, bullish hammers. Okay, let me walk you through a bullish hammer. A bullish hammer started red, and it was red, red, red. That was me when I started trading. I had no idea what I was doing. I was losing money. But then I started to understand psychology, mindset, started to get a little bit better at understanding price action. And that's when, after all those years of being red, 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 I started to reject this and start to come up and start to see a little bit better in my trading. It wasn't perfect, but it was better. And then over the years, I flipped all of that red losses, all of those red losses, and I turned it into something positive. And now I can say confidently, I'm a bullish hammer with my education that I have in the markets, with the help that I'm giving everybody here. I hope that you guys one day can become a bullish hammer and turn into an ignited bullish engulfing candle, and the rest is history. But if you guys are red candles right now, SST, we're your support zone. We're here to always support you, to help you when you need help. We're always here for you, whether it's on YouTube, whether it's in Zoom. Soon we're going to have some sessions with the VIP, the Lifetime Snipers. That's going to be coaching for you guys. That's going to be immediate support for you guys. And it's going to really, really benefit everybody here. Okay. So guys, I hope you learned a little bit about being a sniper in the market is all about calculated decisions. It's about managing your risk. It's about taking good trades at high probable areas. It's about not reacting on emotions. Okay, snipers in the real military, they got to control their breathing because they got to control everything. So sometimes when we take a trade and we're in drawdown, we're panicking, our heart is beating, and this you cannot allow that to affect you in your trading. You got to remain calm and cool as a cucumber, and always think when you're trading like a sniper. Always make calculated decisions, and they'll lead to success. Okay, guys. Our next webinar that I think that we're going to do is I always talk about price action. Okay, I always talk about price action, price action, price action, but we need to learn what exactly is price action. Let's just talk quickly about the history of price action and where price action is today, and the reason why I say price action is the most important aspect in trading. It tells you everything that you need to know. It tells you time and sales. It tells you volume. It tells you psychological zones, areas. So in my opinion, there's nothing better than price action in trading. Okay, once you learn price action, all other strategies follow price action. So again, if you're trading support and demand areas, or support and resistance, or supply and demand, those areas were created by previous price action. That's how they were created. If you're trading an inverse head and shoulder, was created due to price action. If you're trading smart money concepts, you're trading concepts that were created by price action. If you're trading ICT methods of change of character or break of structure or fair value gaps, those were all created by price action. A change of character was not created by changing. It needed to change something. It needed to change the character of the price action that happened previous. So price action is your foundation, and it will allow you to do whatever you want in the markets. Okay. I just want to say thank you to everybody. I know these webinars are long. They're long for me as well. I've lost my voice here. It is Friday, guys. If you're going to trade this afternoon, please trade with proper risk management. Everything we just talked about on today's call. If you've already hit your weekly goal, if you've hit your daily goal, walk away from the markets and start to enjoy your weekend. Put a little bit of study time in the weekend. Watch some of these webinars. Watch some of our previous live sessions. Go in on our website and watch a few webinars, guys. Get caught up because I'm going to be creating more and more and more, and then we're going to start to get more in depth, guys. Okay, so this is kind of just I'm setting the foundation for us, so that we understand what it takes to be a trader. I want us to understand, first of all, what it takes to be a trader. We talked about sacrifice, okay? We talked about dedication. We talked about these things, okay? And this will lead to your financial success in the near future if you do take these things serious, which I know you guys are, okay? So everyone on Zoom, thank you guys. If you're in Canada, happy Thanksgiving weekend, long weekend. Monday, we're probably going to take a day off Monday, but I might come in. We're going to start, guys, the next couple weeks, we're going back to Tokyo. So just I want to mention, we're going back to Tokyo. Let me just pause this recording. 1 second.
Recording stopped.
Okay, so sorry guys. This weekend, next few weeks, we're going to move into Tokyo session, more education, more webinars, and have some fun in there. If you're going to celebrate Thanksgiving, happy Thanksgiving to you guys. A good Friday, and we'll see you guys next week. Make sure, please, guys, like and subscribe on YouTube. If you guys do enjoy the education we do here, I do personally appreciate it. Comment on anything that you guys want going forward. If there's anything that you want to see in a webinar, let me know. I probably have covered it, but I can do some fresh analysis and do a fresh one. So, okay, guys. But hopefully you guys learned something from today's webinar. We talked about a lot of things. Just allow the trade to come to you naturally. Stop chasing trades. More about stock analysis, Rob. It's coming. But Rob, I said this the other day. I don't want to just jump right into stock analysis, and the snipers are not ready mentally for it. And so that's why I'm really wanting us to build a good foundation, because if we don't have our psychology, if we can't control our emotions, if we have no sort of risk management, going into stocks is just gonna make matters worse, because there's a lot more education involved in options than just simply hitting a buy and sell button like in Forex. You have to really understand what implied volatility it is. What is delta, time decay? What is the expiration date of an option? What are calls? What are puts? What are wheels? What are covered calls? What's a secured put? There's so much that we got to talk about that's a little bit more advanced for most traders. That's why I just want to make sure everybody is on the same page with risk management, with psychology and emotions, and patience and discipline. After that, Coach Ron will take us to wherever we want to go. But I got to make sure that everyone has the foundation set. If you guys have that foundation set, the faster you guys set the foundation, the faster we can get into futures, the faster we can get into cryptocurrency, the faster we can get into stock and options. And I promise you, you guys will really, really appreciate learning about different markets and different sectors. And you guys can really, really understand how trading is a lifelong skill that you can do for the rest of your life in certain things that you are passionate about. Like I'm passionate about finance, so I follow big banks. I told you today was an exciting day with the big banks reporting. I got to go now this weekend and investigate how they 2x revenue beats all of these big banks. That's amazing. Like, if you guys are not asking questions, am I the only one that's concerned about this? Like, they're pulling in record revenue, like to 2-3x over the analyst beats. That's impressive. What are they doing? Like, all of that. It's interesting to me. Okay, guys. So thank you, guys. Everyone, have a fantastic weekend. I appreciate all of you guys joining our New York sessions, but make note that we will be moving into Tokyo for the next couple weeks. That we start 7 p.m. Eastern. Okay, so make note of that, guys. And we'll see you guys. If you can't come to our Tokyo sessions, we'll see you guys back in New York in a couple weeks. But we're going to go back to some education, some webinars, some live analysis. It's more where I can help coach you guys if you guys have any questions. And the markets move a little bit slower so that we can talk about things and always improve, guys. So, and please review your journaling this week. Please review your past trades. Learn from them, continuous improvement, and you're going to get where you need to go. Okay, guys? It's a work in progress. Trading is not easy. It takes a lot of hard work, and I know you guys are determined to do it and make me proud, guys. You guys are making me proud. I'm like a proud father when you guys are making me. When I see you guys' success, everything that we do here at SST is worthwhile. It really, really boils down to that. So I know that these hours that we do to help educate is paying off. Because if it's not paying off, guys, then I wouldn't be doing this. I wouldn't be getting any enjoyment out of this. I like to see you guys successful. But there's a smart and responsible way how to do this. Okay, you guys are all adults. You guys are very mature. You guys know how to do this. Okay, we'll see you guys. Have a good weekend, guys. Stay safe. Have some good time with the family. Have a good turkey dinner, and we will see you guys next week. Thank you, guys. Have a good day. God bless. Juma Mubarak. Thank you, everyone.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.